mlimani,
wavuta wengi,
imeinuliwa mlimani,
waokoke,
imeinuliwa mlimani,
alama ya ushindi,
imeinuliwa mlimani.
Malaika wa mbingu watakutusia, kitoto. Malaika wa mbingu watakutusia. Malaika wa mbingu watakutusia, kitoto. Malaika wa mbingu watakutusia.
Yosefu, wanamtunza mtoto
Kitoto, malaika wa mbingu watakutuzia.
Lala kitoto cha mbingu, Masira mkombozi wetu. Lala mwana wa Mungu.
Lala kitoto cha mbingu, lala kitoto cha mbingu, lala kitoto cha mbingu, lala kitoto cha mbingu. Kitoto, malaika wa mbingu watakutuzia. Kitoto, malaika wa mbingu watakutuzia.
Nani mwenye uweza tena?
Bwana wangu
nani mwenye nguvu? Hakuna chochote cha kushindana naye.
I think we are asked to network the people around you. So we'll do ice breaking and then we'll welcome the speaker of the day. Thank you.
Good morning, everyone. Habari ya leo. I want us to stand up and do an exercise. Just look for a space. Tafuta space, tafuta space, tafuta space. So we are going to, I don't know what you normally, when you hear there is fire, what do you usually do? Yeah? You run, isn't it? So we are going to go around saying fire. I'm going to go around saying fire in the mountain. Then you just say run, run, run. Sawa sawa. At some point I am going to say you group yourself in a certain criteria that I will give. Sawa sawa. So we will continue like that. So tuanze. Fire on the mountain. Hayanzeni kuran. You cannot run on the spot. Can you run on the spot? Ati run, 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 run. No, you run. The fire is on the mountain, so you run. Sawa sawa. Fire on the mountain. Father on the mountain. Fire on the mountain. In groups of 5. Groups of 5. Groups of 5, it should not be more than 5. Sawa sawa. Group of 5, they are 4 there. Haya, tusonge tena. Fire on the mountain. Father on the mountain. Musishikane hivyo, kwa nini mnashikana? I'll do another criteria so you can't do. Fire on the mountain. Fire on the mountain. In group of 3 with the same color of clothes. Same color of clothes. Groups of 3, same color of clothes. So mtafutane. Groups of 3, same fire. Haya, fire bado inakuja, mtafutane. Group of 3 with the same color of clothes. Who doesn't have a partner in the same color of clothes? Who doesn't have a partner in the same color of clothes? Fire on the mountain. Fire on the mountain. Fire on the mountain. In groups of 4 same gender. 4 same gender. 4 same gender. Group of 4 same gender. Lazima mkwe mmetoka kutoka kwa the gender the same. Sawa sawa. Now, fire on the mountain. Haya, kuna watu hawatoki penye wako. Fire on the mountain. Fire on the mountain. Fire on the mountain. In groups of 3 according to your age groups. Groups of 3 according to your age groups. So mtafutane watu wa 1990s, watu wa 1970s. Mjuane. Groups of 3. Mnaulizana 70s kuja hapa. 80s kuja hapa. Groups of 3, groups of 3, groups of 3. Tuko watu watatu. Haya, so in that group of 3, I want you to share something with your neighbor in that group of 3. I want you to introduce yourself to the 3 of them. The 3 of you introduce yourself. What is your name? What do you do? How long you have been in self-help? If you are a guest, it is now your chance to know. And what excites you most about St. Paul self-help group? Sawa. Haya, to share. We are going to share for only 30 seconds and move on. So let's share. Your name, your profession, how long you have been a member of self-help, and what excites you about being self-help. Sasa hapa ndio mnatafuta guarantors wa loan. Guarantors wa loan wanapatikana hapa. You share your name, your profession, how long you have been a member of self-help, and what excites you most about self-help. Aya, share. Fire is almost coming back. Mnapenda kukimbia kwa maji? Si mta drown? Fire on the mountain. Fire on the mountain. Fire on the mountain. Fire on the mountain. In groups of 3, but not the other 3. 3 and now. Anyhow, only 3. Aya, another 3. Aya, share the same thing. Your name, your profession, how long you have been a member of self-help, and what makes self-help, St. Paul self-help the best. What excites you the most being in self-help, or what stands out in self-help? Tujuane. Watu watatu. If you are a guest, if you have a guest in your group, it is now the high time to you sell self-help group. Uuze self-help sasa kwa huyo guest. Umwambie join. And Lucy, the previous group you were together with this lady. Now the second group you still became together.
So we are getting some good news.
Fire on the mountain. Aya, fire on the mountain. Aya, fire on the mountain. Aya, take your seats now. I want to see how you'll take your seats so that I can know how to move you forward. Haya, let me see. Haya, tusimame penye umshike bagi yako na virago zako.
Pigisha makofi ya welcome.
Sawa. Haya, tuanze hii wimbo. Utabeba, utaacha mali yako, utaenda. Ukisonga kwa kiti yenye iko empty mbele yako, sawa? Nitabeba virago zangu nikienda, nitaenda. Siweze kuhama ukienda kwa kiti yenye iko empty mbele yako. Utaacha mali yako, utaenda. Usikae kama mbele yako kuna kiti iko empty. Unabeba mizigo zako ukienda kwa hiyo kiti iko empty. Sawa? Utabeba vilago zako, utaenda. Haya, bado kuna watu hawasongi na hebu tusimame. Ona sasa hapa. Umesonga. Haya, utabeba vilago zako ukienda. Ukianguka nayo Haya, nani yako kwa kiti? Mbele yako kuna kiti iko empty? Kama mbele yako kiti iko empty, ubebe vilago ukisonga. Nani yako na kiti iko empty? Kama kiti yako si empty, mbele yako unaweza kaa. But yuko kama ni empty, utabeba mali yako ukisonga. Ndio tuachie watu wenye watakuja late nyuma. Si ndio? So we are going to welcome right away Jesse. Tumpatie how many factorials? 5 factorials. Haya, tuanze. Haya, let's go. Karibu sana Jesse. Asante sana.
Thank you so much. God is good and all the time. Hallelujah. It's a pleasure to be here. My name is Jesse Ludenyo. I have not seen a face here which I have met before, but in case we get to meet elsewhere or in town somewhere, please do say hi. I'm Jesse from KCB Investment Bank, and I'm happy with what you guys are doing as a self-help group here. This is an amazing thing that you're doing, and to learn that you've been doing this for the last several years is even more amazing. So thank you very much, Chairman. Thank you very much, the management team, for inviting us to be here today. And I hope it will be an exciting opportunity for you to learn more about investment. Are you excited? Are you excited? Haya, wale wamefurahi, hebu nione tu kwa mkono. Jamani, asanteni sana. Kama mmefurahi, that is nice. Wajua, in Kenya siku hizi ni vizuri kusoma ground, si ndio? Uangalie mlima. You can come to a forum and maybe people are not excited, and the next thing you find yourself elsewhere. So at KCB Investment Bank, we are focused on building our clients, building wealth for our clients, and building wealth portfolios. So building wealth, we are not just talking about building you as an individual, but even you as a group, as a self-help group. Because one advantage you have is you have a pooled common fund. And the growth of pooled common funds is higher. The growth potential is higher than if it is an individual. If you're saving, kama wewe mwenyewe una save 10,000 every month, and as a self-help group, you are able to mobilize or save together, let's say 500,000 or 100,000 every month, then the potential for multiplying 100,000 is higher than the one for 10,000. And that is why what you're doing is a very good initiative. But now, to begin my presentation, first of all, I'm here on behalf of Morris. Morris is my boss. His name is Morris Opio. He's our director at KCB Investment Bank. They had a managerial meeting, emergency, so he asked me to step on his behalf. And so I hope that you'll be able to get a lot of information from what I'll be sharing. So to begin my presentation, I had wanted to talk about finance at a personal level for your own sake. Finance for your own sake. Finance at a personal level. And discovering the path to financial security. Discovering the path to financial security. You as an individual. How do you discover your path to financial security? How do you discover your path to financial security? So one thing, finance, how you invest is influenced by your mentality. Now one thing you have to realize, as human beings, our minds are not our own. Our minds are influenced by so many factors. So as much as we think that we own our own decisions, majority of the time, our decisions are influenced by what we see, what we hear, what we come across on a daily basis. And therefore, your mind is not your own ultimately. It's not a disadvantage, it's actually an advantage, because if you have the right information, you can take advantage of it. And the people today who are wealthy have taken advantage of information that they had, privileged information. Previously, if you realized, banks like KCB were not willing to meet individual investors like you. A lot of wealth that is created in this country today is part of the products that banks like KCB have been selling through the years, but to few individuals. That is why I can tell you from my standing point, we have clients who come in from a specific set or community of investors, I would say, in this country. If you go and open a hardware at the same time with this client, you will not match. I believe you understand what I'm talking about. Why? Because they have very significant pool of capital to always put put into their business. So at the bank, we are able to see, because we can see the accounts and we know these guys have this pool of investments, these ones don't. So someone will come and say, I would like to withdraw my funds, I want to open up a hardware. And as a similar individual from a different business community comes and says he wants to open up a hardware, you know. And when you release the funds to both clients, after 6 months, you realize one is struggling while one is thriving. There are some from that business community who are even able to make orders, large orders, trailers. They come into a hardware that is smaller than our normal hardwares. You see someone bringing in cement. This entire room is able to order cement once and for all. And it's not because that the other one who is not performing is not doing the right thing. They're actually doing the right business. But this one who is advantaged, and you'll always see those hardwares in the industrial area, you'll always see them in downtown in Nairobi, it's because they have sufficient capital. Why? Because they have information on where they put their surplus funds, where they put their profits, where they put their monthly income. Because you as a normal businessman, you can put your monthly income in a savings account, you can put it in a bedroom, in a mattress, or you can put it in a circle, or as a self-help group, you can put your contributions in a bank account lying idle. But for them, they have privileged information. So you will never, it's rare to find a significant amount of their operations in cash. What they put in cash operations is a very little amount to be able to run the business on a day-to-day. The rest is put in what I'm about to tell you. And that is the difference between where we are and where we ought to be. So to understand this in perspective, we have to understand what influences our investment decisions. A lot of the times when you hear an investment idea, you begin to get excited. Yeah? You begin to see the future. Yeah? Vile utamake do kwa hiyo biashara, how you will drive, which kind of car you would like to buy. It is because that investment idea is exciting you. When it excites you, you enter into something we call optimism and excitement. Optimism and excitement. After optimism and excitement, you put in money, you begin to realize the first month, some income, second month, some income, you move into euphoria. You have not realized whether the business, the amount of risk the business has. But you are in euphoria because after all you are making a little bit of cash. So you might find you have sunk in 1 million in a business. In the first month you're making 50,000, second month you're making 50,000, and you think it will be stabilized. But have you made profit? No. Because you've sunk 1 million, yes, you're making cash flow, but you've not made profit. At the end of the day, you are still lower than where you are. So the fact that you're in business does not mean that you're actually making progress financially. Okay? So we get to a point where we call it euphoria. Then when you begin to face a challenge in the business, you begin to enter into what we call anxiety. And every business must face a challenge. The problem is the question is not whether you will face it or not. So far as you have embarked on that journey, you are going to face a challenge. Now when your income, your monthly income, umekuwa ukipata polepole, ikifika mahali tuseme hiyo mwezi something bad happens to your stock or something bad happens to your supplier, utaanza kuona a bit of panic. And at that time, most of our clients, when it may discover, the ones we've discovered so far, are those clients who give up at that stage. When the first challenge comes into the business, they give up. Unapigia client anakuambia hiyo biashara hata niliachana nayo. So when you ask them hiyo loan tutafanya namna gani? Inaanza kuwa saa ni kufukuzana huku na huku, kufukuzana. Unaenda unaambiwa kuja kesho, unaenda unaambiwa kuja kesho. Why? Because the first challenge are setting. And that is why I will give you a secret. For banks that give out money, or for investors that invest in businesses, right now what we are looking for is not a good idea. We know they are good ideas. We are not looking for good ideas. We are not looking for money-making businesses. We are looking for consistent entrepreneurs. So if you want me as a portfolio manager to look at your loan application and give you an approval, the number one thing that will carry the weight in that model is how consistent have you been in your business. It's easier for me to give a loan to somebody who has done carpentry for the last 10 years and he needs to expand his business than you who has a digital idea for 6 months. Because I know, baada ya 2 months tunaanza kusumbuana. You have shifted from IT. You are now doing pastoral work or whatever. Unaona? Those are the kind of clients wenye wanatuletea shida sana in the portfolio. So consistency is key. But because we are human beings, and this one is not judging us. This is how every human, even me, this is how every human behaves. Because our minds are wired to attract good things. Yeah, we are wired for sweetness. Humanity is wired for comfort. You want comfort. We don't want any kind of pain. The way your mind registers pain, in a register in a very negative format, yeah? When you hear pain, when you hear discomfort. So that leads us into panic, depression, and despondency. That is where we give up. Now, the point is, at the point of despondency, that is where the maximum opportunity is. I'll give you an example. Practical example. Last year, for example, let me give you an example of the stock market. You know the stock market? You've heard of NSE, Nairobi Stock Exchange? Yes, the stock market is a very good example. Last year, the stock market performed very poorly. It did negative 33% last year. Should be around there in negative. In other words, most stocks tanked. What happened? Most investors were calling us, I want to sell my shares. I want to sell my shares. I want to sell my shares. Everyone is calling, I want to sell my shares. So, by February, most investors had actually sold most of their shares. Now, why was the stock market going down? It was because foreign investors were thinking that Kenya will not pay back its debt, which was due in March this year. Simulioni hiyo kwa news. Wangapi walioni hiyo kwa news? Kenya ililipa deni yake. We actually restructured a plan for our debt, and we refinanced our debt. In other words, we took a new one to pay the old one. They did not know that was coming. Immediately that happened on February to 27th, the month of March, the stock market began going. KCB, I have a client investor who invested in KCB, for example, at 20 shillings. By June, they were selling it at 40 shillings. That is twice. So that is an example of how investor behavior affects our businesses. Even in our own personal businesses, sometimes at the time which we want to sell everything and liquidate, that is when, if we would have waited a little bit longer, you would have seen clients coming back. Because normally the nature of business is, it takes time for word of mouth to be passed. So you find we have had investors who have sold off their business assets at the time when clients are coming back. So when a client comes back and they find the business is no longer there, the guy left. And you listen to the client, and the client is like, huyu jamaa alikuwa ananipatia discount mzuri sana, he was a very good customer, why did he leave? Ukienda kumuuliza anakuambia biashara ilikuwa ngumu. Giving up. That is the point of despondency. The point of despondency. Okay? And then when we leave that, we now realize by the time you're leaving, the business or the market begins to be skeptical. People begin to see the value of what you are selling. people begin to see the value of your business. So that is a very weak point to be at, and it is not something that we would wish any member of this self-help group, any member of this group and many other self-help groups to get to. Which is why at KCB we want to really make you understand why some of these decisions are important and how they influence your financial performance. And by doing that, what we want to achieve is to walk a journey with you. It's not just a matter of me coming to present. You can have all the good knowledge, but if you're able to get to me tomorrow and ask for advice, if you're able to come to me tomorrow and ask what is happening in the market, what are the trends in this business, what are the trends happening here, how should we invest this as a self-help group, then we're able to work with you. And it takes, wealth building takes that step of working together. It does not just happen in a day, it takes a procedure. So I included a few slides just to talk of some of the what we call biases that influence our investment decision. So in the financial decision making, you have different biases. We have herding, overconfidence, hindsight, overreaction. So I just wanted to explain to you some of the biases that we have noted from our clients, how our clients are being affected by these biases in the investment decisions. One of them is what we call hindsight bias, where we always look at what happened. Oh, unasikia, you always hear someone saying, oh, hiyo nilijaribu ilikata. It failed. You know? Hindsight bias. We are always looking behind. You know, you always hear investors saying they regret investing in a particular investment. They regret investing in a particular business. Some of it may be true. There could be regret. You could have made a mistake in investment. But some of it could also be correct. It should not be a regret. You might have made a loss. What we normally say is that a loss is not a failure, particularly in business and entrepreneurship. We do not stop at a loss because a loss is part of the process. Even big banks like ours recorded losses in 2021, 2022. But this year we have recovered. Okay? So loss is part of the business process. It's always part of the business process. It depends on how one is structured to come out of the loss. How one is structured to come out of the loss. How are you able or willing to bounce back? So hindsight is one of the biases that influences our decision-making process. You know? The second is overconfidence. Overconfidence. Now this one, I have to admit, it is very common among men. Ladies in the house, just do so that wawasikie vizuri. Overconfidence. This one I have to be very honest with you. It is very common among men. Why? Because it's just in our nature. You know, when a man believes in something, he believes in it, which is, there is nothing bad about it. But sometimes it can also act as a bias, because you could be so overconfident about something that you have not done enough due diligence about or enough research about to know how you are going to maximize your income. So, okay? So you might end up sticking on to investments that are loss making. And for us, as the investment bank, we discovered this among our clients, and we said, because we are working with our clients a journey, we would like to have that personal relationship with our clients, so that even if it is a business, you can call us and ask us to do some research for you on the viability of your business. Okay? We look around, we see whether you can actually make it based on the capital you have and based on the liability, that is the borrowing that you're willing to or you're looking for from us. So we look at the viability of your business. And so if you're the way to control this overconfidence is, number one, controlling our ego. Najua nimeguza mlima. Controlling our ego. Ego is very important. Listen, ego is not bad. Ego is not bad. It is necessary for the survival of men. But you need to control it. Because sometimes, when you don't control your ego, you end up making mistakes that are not calculated. Ukikuja nyumbani, mama anakuuliza, hii pesa ulifanyia nini? You cannot answer. Inakuwa ni stress kwa nyumba. Why? Because ego at the beginning was not controlled. Ego was not controlled. So particularly is controlling your ego. And number two, it is you have getting the opportunity to hear experts' perspectives. When you launch out into a certain field, when you launch out into a certain area, be it an investment journey or even as the self-help group, it is important. That's why we are here. We want to open our lines. Ask for research. Let us carry out the research for you. Let us model out your business for you. We can look at the projections. But the problem in Kenya inakuwa moja. If someone has a toothache, anaenda kuuliza fundi wa viatu. Hey, by the hii meno imenisumbua, naye anakuambia hata mimi nilikuwa nayo, ilikuwa ni last year kama tu saa hii. Nilikuwa na hiyo shida. Nikaenda kuna jamaa fulani ako na dawa mzuri anakuanga hapo town wapi, and you go. When we have a problem in a specific area, it becomes very difficult for us to seek the experts in that area, but very easy for us to listen to news or to listen to information out and about. You know, you're hanging out with your friends, they will give you ideas, they will give you business ideas, they will give you what is happening in the market, they will tell you what's happening around town and all that, and you easily take that information and take it as true. You know, and you take it as true, which is a huge challenge for us as Kenyans and even as Africans. It's important for us to always seek the expert opinion in it. In every matter, always seek the expert opinion. And the third thing is to always re-evaluate your decisions. Perform a post-mortem on your decision. You have to sit down mwenye uji inaitwanga meeting with yourself. You call yourself to a meeting na ujiulize about this investment. How am I doing? Even if the business is doing okay, always have a post-mortem. Because if the business is doing okay, there is a reason why it's doing okay. Uwezi kaa uka assume because leo tumeunda this amount of money, we will always be doing well. Ama ukai useme businesses go up, they go down. Inapananga inashuka. No. You have to sit down and evaluate yourself when things are going good and when things are going bad. Because when things are going good, it will help you to solidify and sharpen the areas where you're maximizing income. When business is going bad, evaluating your decisions is important to help you change the specific areas which you need to change. Sijui kama tumefika mahali hapo, tumeelewana kidogo. Is anyone a victim of any of these biases? No, it is okay. Haina shida, hata mimi mwenyewe ni victim wa mingi sana. So if you are a victim, it is important that you at least pick something to change your investment decision and the way you make your investment decision going forward. Let me just unlock this. Okay. The third is hard bias. Hard bias is now building from overconfidence. Hard bias is you listen to the crowd. And this one influences everybody because kila mtu ako kwa inaitwa nini? Walisema ako kwa age group. I saw us being clustered into age groups. So ukikuwa kwa age group yako lazima uagree na hao. Sana if you're new. If you join this self-help group leo, itabidi uagree na everything so that you blend in. You don't want to contradict the group view. Because if you contradict, wataku sideline. So a lot of times we have first clients who are under pressure. Majenzi, hello, hawa wametoka huko juzi, ilikuwa strong sana. For Gen Z, I will talk about that group up mbele, because we did some research on some of the investors in the market, and our report was called INVEST-Z. You know, Gen Z make up 25% of the world's population, and statistics tell us that by 2030, they will be owning half of the world's net. If you look at some of the richest guys who are coming in tech, number one, they are young people. Two, we have a lot of young people who are inheriting a lot of wealth from the older generation. Actually, even in our own clientele base, we are noticing a certain, the mean average age for our investors is coming down every year. Why? Because there's a lot of money among the young people. We have young people today, I know, some may even be here, who earn from the house. You don't need to go to work, you know? And they're being paid in dollars, and they have a lot of money. So what's the challenge? You have all this money, and then now making the investment decision, you get influenced by your friends. You know, you go out for a game, mkienda kuwatch game, wanakwambia, hey, by the way, mwana hii, awase wanafanya forex, sijui nini, wachikum sana, hey, ana make dough, hey, ana drive, sijui GLE na nini, all of a sudden you find someone has put entire investment into forex. The following day, he has lost everything. We have had such a case, okay? So, hard bias, that's what we call hard bias. You're always making investment decision based on what your friends and the people around you are. And it's spearheaded by fear of missing out, FOMO, it's spearheaded by group polarization, where you don't want to contradict the opinions of the group. So how do you overcome that? You need to be comfortable with being uncertain. Be comfortable with yourself. If you don't know something, just be comfortable at that state. Don't be in a panic to always know. They normally say curiosity kill the cat. So you should be comfortable in uncertainty. Develop your confidence, okay? Develop your confidence. Even if they seem to have moved miles ahead of you, they seem to know a lot more than you, it is okay. We normally say it is okay. You don't need to know everything. Particularly if you're in that group setup, you don't need to prove that you know. Because a lot of those proving, a lot of those actions are what lead to financial mistakes that end up costing someone later in life. So be confident with yourself, embrace critical thinking, and really just be aware of yourself, be self-aware. Be self-aware. When it comes to personal investing is a very personal journey. It is like faith. It is very personal. So, as much as products might be the same, but the journey for everyone is always different. The journey for everyone is always different. I know there are some who come from up country, wale wambali kidogo, from huku. Those communities believe in building a house at home, sindio? So, wewe ukijeka kwa group ya someone who is from, let's say, around the city here, or who was born here, or whose family is based here, they don't have that pressure. But wewe kila saa who come from well-established families, which is okay. So their personal financial journey is different. They might begin from an investment of 1 million or 10 million or whatever. You might begin yours from 100,000. There's no difference. The destination is the same. If you remain true to your focus, you can still achieve whatever you want to achieve in this planet. Because many also have a head start at the beginning. You will hear young people, when you're young, you will hear people talk about they are making different investment decisions. It's making them money. 10 years later, when you come and greet this person, anakuambia, I don't know where, sijui mali life ilienda. Sijui vile maneno ilienda. Why? Because it could even be tied to the person you marry. We have no control over that. And you have no control over your friend and his decisions. So you have to be comfortable with yourself, be comfortable with your own journey, of investment. So, yeah, this is just a slide basically explaining to us what stress caused by financial decisions can cause. You know, sadness can evolve to stress and depression, and good financial decisions should transcend thrill and sustain value long after the dopamine levels have been normalized. Why are we doing this? It's because we understand how we make decisions from how our brain functions. That is why we at KCB, we don't want to jump into taking you to investment without you understanding that is a behavioral process. Money and personal financial management is a behavioral process, and it's a personal journey. Okay? So how you deal with investments and how you deal even as a group. What we are focused on as the investment bank is to be able to build group wealth. Because if, as a self-help group, we are able to give you a personalized product where we personally construct your portfolio as the group. So your investments that come into the group have a personal portfolio with a manager. Why? Because we have some of our very wealthy clients, super clients, who are assigned managers. Imagine, mmoja tu anashughulikia client mmoja. So you understand the importance of group wealth. We have some managers who are focused on just a particular wealthy client, and they make sure that portfolio generates a return annually based on the expectations of the investor. So it's the same thing. We have come here today because we also want to work with you a journey, construct a portfolio for you as the self-help group, so that as you are doing businesses personally and as you are contributing your money monthly, it is going into a dedicated portfolio that is well balanced to ensure that your risk is minimized and your return is optimized. Now, some of the products that we deal with at the investment bank are not necessarily business always. This is what we call money working for you. When you talk about bonds, when you talk about shares, when you talk about, this is money working for you. Because you don't have to wake up every morning to work. If you buy a bond, the guaranteed coupon, we call it a coupon, it's a rate by the government. It will be paid. Whether you are asleep, you are in town, it will be paid to your account. Okay? So it's just upon you to go and withdraw. And so you can, we're not saying you should be lazy and just sleep and now money. No, you can continue working. You can continue working. So you're doing your daily business, but the money you're making is earning revenue for you. Revenue that you have not necessarily worked for, which is the advantage of some of these products. And that's why I said, I began by giving you the example of these two business people. We have a businessman who is one of our clients. He had, I would say, at the beginning of his investment, he had a particular sum, which was the same as another businessman. But he took half, put it in money market securities and bonds, and then took half, began the business. So whenever the business is not bringing income, this one supplements. And that is why you cannot catch up with him when it comes to business. That's why you cannot catch up with some of these guys. He's able to order a container of cement, fills this entire room, while your own hardware could be right next door. But where's the bigger order? Because I own your cash. And if you look at the leverage umechukua loan, so hauna cash ingine kabisa. So utaona two orders zinakuja. So it's because of this kind of products. And that is the advantage these guys have. What we want is you to maximize utility. We have gotten to a point in Kenya where this information haikuanga na watu. Many people did not have this information. And the little people who had this information, they unfortunately form the top brass of the wealth community, particularly in Kenya and East Africa. The people who took advantage. We have, I think in our portfolio, we've seen clients who had some of these portfolios from in the 1980s. So right now it's their children who are inheriting some of these portfolios. Yeah. But when you look at most of the Kenyans, the native Kenyans of this land, we realize that their portfolios are now beginning. Some are now getting this information. Na vile wanasemanga, I hear them say, hii Kenya si yetu, si ndio? Kenya ina wenyewe. Hao wenyewe, hao, they are the ones. It is because of these products that it is theirs. So the earlier you have this information, the better for you. So that as you walk out here, wewe unatembea uko na 10,000 kwa mfuko, unatembea ukiangalia town polepole, unaangalia town, watu wanasema huyu tunakwanga naye hapa, huyu anafanya hapa, kwa na hii biashara nini. But behind you, they don't know the financial muscle that is backing you up. Yeah, that's what we want to achieve for you. You need to have that financial muscle, so that you don't necessarily just generate income from your business, but behind you, you know, hata hii bond ikimature ama hii portfolio yetu ya self-help group hii inatuletea a return of, let's say, 13% per annum, and then you actually feel confident. You actually feel confident, and you don't have to now succumb to some of these biases that we talked about. Why? Because you're confident of what you have. There is someone who can have 1,000 in the pocket, na ako worried, ako worried, sick. But there's someone with 1,000 in the pocket, the same 1,000, but he's not even worried about anything, because he knows he can liquidate some cash somewhere confidently, or he knows some cash is coming in tomorrow or the day after. So that's what we mean by we need to maximize your utility from some of these products, so that you avoid that emotional circus of dealing with money and investments. So how exactly now can we optimize our savings? This is about optimizing savings and controlling your expenditure. Optimizing savings and controlling your expenditure. From our research, we did a research which I told you, we labeled it InvestZ. But ideally, it was just a research about our investors in the market in general. And we realized that 89% of investors, or people who actually invest, actually save. So we have a very small percentage that don't save, which is why your monthly savings is very important. People who have that extra advantage is because they already have some savings somewhere. Now, you'll realize some of these products, you need to have enough financial muscle to invest in some of these products. But the return is also good, and it is safe. So if you don't have savings, it becomes very difficult even to access credit. Because ukikuja kwa bank, watakuuliza, how much do you have? What is your collateral? Uko na shamba, uko na gari. We will always need some form of history. We will also look at your savings history. Your current account, ina perform aje. Do you have an investment account? Do you have investments? For example, if you had a bond, you can easily use that as collateral. Maybe I have a bond of 3 million, I have this, you give them, okay? But if you have not built savings, it becomes very difficult to even access credit, okay? So that's why savings is important, and you need to begin now. I can see your hand is coming, but don't worry, I'm coming to you. I will answer all your questions. So, and we realize that also, majority of the young people are beginning to get this information, and they are beginning to save early, which is an advantage to us. Now, knowledge about investing, we realize that 90% of our investors did not feel like, who do not save, do not feel like they have enough knowledge, and which is why I'm here, to give you the knowledge and the secrets. Once you have the knowledge, the decision you take after is up to you. But the most important is you have the knowledge. Because if you know that this investment is possible, that I can save to this amount, after this amount, I can buy this product, it will give me this return, in 3 years, I'll buy this, then you are able to begin your wealth building journey. And that's how you begin your wealth building. But if you don't have this information, you are more disadvantaged. Okay? You are more disadvantaged, which is why I'm here. It is to disseminate this knowledge to you. And you realize that majority of those who have invested actually have that information. So how we've been trying to do this is we've been trying to approach various groups in campuses. We've been trying to approach various groups in churches all across Kenya and East Africa. And we've been disseminating this information to them. And you'll realize that from where I sit, majority of the places that we've visited, and we've actually had significant impact and participation, are still among the wealth class. That's the unfortunate bit, because they actually get that information. They get it. So what we are looking at is to try and disseminate this information to as many people as we can. A country like the USA, you realize that majority of the families are actually wealthy. If you compare them to Kenyan standards, they are super wealthy. Why? Because a lot of that information has been passed down from generation to generation. And that's why matching up with them it's quite an uphill task for us in this day and age. Why? Because they have much more information about this, and they actually act on it. So as we talk about how to save and how to optimize your savings, some of the options, of course, that are in the market for the money markets here, we have the money market, which is your money market fund, your MMF. I'm sorry if it's not clear. I will read it out to you. We have your shares and bonds. We have your money market. You have your real estate. You have your business or biashara. And so this is part of our survey. What we did is we were trying to look at what are the investor preferences for some of our investors. And a majority of them lied between shares and money market. You can see shares and money market. We had a significant percentage also in real estate. The challenge we had with real estate was we were asking our investors, how much return do you get from your real estate? They're telling us I get 20,000 per month, 30,000 per month. They forget to calculate the return, because the return is what is important in real estate. How do we calculate your return? Your return is your total expenditures for managing that estate. Total expenditures for managing that estate. Actually, your monthly expenditures, you need to annualize them to get a total expenditure for the year. Your monthly incomes in terms of rent, you need to annualize them to get a total return for the year. And when you divide that total return by your expenditures, that's what you get, what we call rental yield. So that rental yield is what we compare against other investments. And that rental yield is what we also compare against inflation. Also, how much have you made? How much have you spent? That ratio, we compare that against inflation. If you are doing lower than inflation, then it's even better for you to put your money in cash, in the mattress. Okay? I do know that there are many, I know people believe in rentals so much. People believe in rentals, but they don't calculate what we call the rental yield. That is the return you're getting, the actual return you're getting from your investment. Because it's an investment. Because we have someone else who has a similar amount of value of rent in form of bonds, but he's doing 18% guaranteed, no risk, or let me say minimal risk. So you, with your rental income, you need to look at what are you deducting in terms of expenses. After deducting your expenses, what are you left with? That ratio, can you compare it to inflation? Can you compare it to a bond? Can you compare it to a T-bill? Can you compare it to money market? How are you performing? And when you look at some of our investors, we realize that to generate significant rental yield, then you have to have a significant amount of rental property. Because if your rental property is not enough to compete with the market rates of different products, then it's not a worthwhile investment. And that's why you're seeing a bit of skewness towards the other securities. So the world today we define it in 4 simple words: volatile, uncertain, complex, and ambiguous. Volatile, uncertain, complex, and ambiguous. Complex, why? You might think your investment is making money, but in real sense, it is not. Real sense, it's not making you money. So if you are making an investment, you really have to be able to sit down with someone who can be able to guide you through the actual math of everything. Don't just make it because you've heard this is the amount of money that is being made every month. You don't just make it because this is what you've heard, okay? Or this is the idea that that came across you. No, you actually have to sit down, calculate the actual numbers, boil down to even how much you pay, the cleaners, how much you use for office expenses or whatever. Put all those expenses in pen and paper so that you're able to actually calculate your real yield. In other words, unakamua ngapi? How much can you actually hold? Okay? So because of that, because of these challenges in the world, you need financial security, you need a health plan, you need social support, and you need psychological adaptation. Psychological adaptation is what I mean by you need to be equipped with the knowledge of how your investment process, your investment thinking works. How do you come about your investment idea? How do you execute it? How do you understand it? Yeah? And how do you overcome the biases? Are you being influenced by overconfidence? Are you being influenced by hard? Are you being influenced by hindsight, regret? Okay? There are people who have come to us saying, mi niliinvest kwa hizo vitu kitambo hata hazikuniletea pesa. But there is someone else who is also making money from the same investment. And I normally tell my clients, understanding yourself is part of understanding your purpose. Understanding yourself is part of understanding your purpose. Because yes, matatu business can be a good business. It's not a bad business, but is it part of your purpose? I don't know if you understand me. Is it part of your purpose? If it is not part of your purpose, and that's why I boil down to what is happening in the bank. We invest, we are very quick to lend credit. People who have proven the test of time. It is easy for me to give you a loan from the bank if you prove to me that you have been doing carpentry. Hata kama ni kuokota takataka hapa, but you've done it for the last 10 years. I have more faith in you than someone who is beginning a business today, new from the ground. Why? Because you must understand, first of all, your purpose. What were you born to do? And you can shine in everything. There are carpenters on Instagram, YouTube. I know you know them. There are people who are shining are just collecting garbage alone, and they can do nothing else. But that is their purpose. And they will always grow. Their businesses will always grow. There is no business that will shut down because, the only reason that would shut down a business is mostly because you have not understood yourself and you're not in line. You're investing not in line with your purpose. So you need all these 4, what you call priority checks. So how wealth inflows and outflows, how wealth flows in our social cycle. We have those of us that get employment income. We have those of us that get inheritance. We have those of us that get investment income. And of course, there are many other. This is just a summary. You could have business income and all that. What flows out is your living expenses, is inflation, investment losses, and debt repayment. Okay? That is what flows out of the wealth there. Yeah? You have your expenses, your investment losses, your debt repayments. So what is left is what we call your net wealth portfolio. Your net wealth. In other words, you have subtract. I know you normally hear so many things. You will hear all sorts of knowledge about personal finance and investing. You will hear assets minus liabilities and all that. But what really matters to you is how much are you making net of everything else? How much are you making net of everything else? Okay, net of everything else. So how do you maximize that? Of course, number one, you can reduce your debt. Debt repayment, reducing your debt. One important thing is if you're able to reduce your debt early, number one, you have access to renewal facilities much earlier and much more. You can renew your debt. Number two, even if you don't want to renew your debt, you have a net financial wealth that is larger. You have a larger net financial debt. Now, I want you to get me clearly. Debt is not bad. Debt is not bad. Debt is critical for the growth of businesses and even for your own personal growth. You can use debt wisely. Kama zi Kenya tumelipa yetu, jamani, si ndio? Tumejikaza tukalipa. So, I mean, Kenya is a good example to tell you that debt is not bad. We are still surviving. At least hatujafunga nchi. Tuna survive bado. So that tells you debt is not bad. It is whether you have a plan for the repayment and whether you're able to actually repay your debt. Because we have had businesses which have taken significant amount of debt. Some have gone under because of debt management. I don't know if you remember Nakumat, for example, the Nakumat story. Significant amount of debt, then things went south. But we've also had good success stories from debt. We've also had very good success stories. Many of the businesses that we see, I wouldn't want to mention names, but they have had proper debt facilities with us, and they have actually financed. Why? Because as KCB Group, one of the things is we want to work with you, like I said. So when you have someone working with you, if you are in a point where the business has a challenge in terms of repaying your debt, then you're actually able to talk to your partner, to your business partner, and explain the situation. And then we'll be able to look at your performance and see how we can be able to help you. For example, for the self-help group, with a significant portfolio, with a significant investment portfolio, one of the things we can do, like I said, as KCB, is to construct a portfolio for you. What do I mean by construct? We sit down, we look at, this is the return on, is the return on, let's say, bonds. This is the return on money market. This is the return on shares. This is the return on real estate. This is the return on this. Then calculate an average. So what we do is we normally do portfolio construction. Portfolio means we don't put all your money or all your eggs in one basket. You balance your portfolio. So if you have this amount in this particular product, you put another amount. And then what we do is we calculate a risk for each of the investments and do an average risk. So your portfolio normally is run through what we call a policy statement, investment policy statement, where we construct together with you. And with you, we'll tell you, this is what you can make from real estate, this is what you can make from this is what you can make from that. And this is the maximum we can be able to give you as a return, given this level of risk. So we adjust the risk and return based on your preference, okay? Which is why self-help groups are very important. Circles, self-help groups actually contribute a significant amount into our economy and our GDP. And so you should be able to leverage on that. Sorry, my laptop keeps on yeah, so that is basically that. So I would like to finish here by looking at the different risks that you could face in your investment journey. One of the risks that is common among investors is called investment risk. An investment risk Basically, the risk of losing your investments. The risk of losing your investments. That's what we call investment risk. So how do you mitigate that? Be conservative when choosing the investment. Be conservative when choosing your investments. Be very conservative. I said earlier, even the Bible says, hmm, there is a way that seems right to a man, but it leads to destruction. So how you choose your investment is very important. You need to factor in a lot of things. You need to actually sit down and do the math for yourself. Do the math and actually look at whether it's a worthwhile investment or it's not. And like I said, a lot of the clients we have met across at our bank is this perception that an investment idea is good. And then a few months down the line, they come back crying. Yeah. And they are unable to finance their loans, or they have lost their investment. So you need to be conservative. Invest in what you understand. Number two, invest in what you understand. Sit down, understand something. If you can't understand something, look for experts who can help you do the research until you understand it fully. That is when you should be able to put money in a business. Don't just assume that because somebody did it, maybe in your family or your friend some while back, that you will succeed. No. Don't just assume that you will succeed, because your personal financial journey is very different. It is very different. Okay? Number three, returns are a second order consideration. Many a times we invest because we are running for returns. Yeah? When you're told inalipa, you don't even think twice. Already you have concluded in your mind that inalipa, hata niweke pesa. And most of those very rash decisions and very quick decisions, and those recommendations that come with a lot of pressure, they're the ones that lead people into financial mistakes. So when you're in a social group and your friends are pressurizing you, oh, put in money by Monday, oh, put in money by, a lot of those investment decisions usually lead to a lot of mistakes, which is why you need to be very careful. Be very methodical. Don't be in a rush to invest. I know one of the notions tunakuwa nayo ni hii pesa itanipita. Let it pass you. I'm boldly telling you to let it pass you, because you will be at a better place than if you go in and you lose your money. So don't be in a rush to make investment decisions, and then aim to serve the purchasing power of available finances. One of the things we normally assume, we neglect to factor in two things: tax, number two, inflation. Most of the time when we're investing, we don't factor in those two things. And that's why I told you, for example, for the case of rental yield, if you compare most rental yields against inflation, you realize you're eating your money. If you're making a return that is lower than inflation, you're basically eating your money. It's like you're chewing your money day by day. For example, keeping cash in an environment where maybe the KES is depreciating, you are losing your money. So you need to factor in those two things. Number two is tax. A lot of us don't factor in tax. What are the tax implications? How much are you going to be paying in tax? Okay. So once you factor that in, get your net return, then be able to make an investment decision. And then consider unique circumstances. Challenges will always come. Consider unique circumstances. Something can happen that is unique. I remember in 2020, we had clients who had just begun their businesses, and then 1 month, 2 months down the line, the country is on shutdown. Okay, so but the good thing is we decided to write off all those loans for our clients, but always have that consideration that anything can go south anytime. Okay, sorry. Yeah. Okay. Then longevity risk. How are you able to survive? How are you able to survive in the next 10 years, the next 20 years, the next 30 years? You need to accumulate adequate financial assets. Accumulate adequate financial assets. That's why I talked about creating a portfolio for you guys. What you need in your wealth building journey is a portfolio. Okay? You need to be able to diversify your risk as much as possible so that you have several investments, different pocket pools. So have adequate financial assets, manage lifestyle and standard. This one is particularly for my friends. Eh? Majenzi tuko. Manage lifestyle, manage lifestyle and standards. Our statistics reported that, by the way, Gen Z spend 80% of their income on beauty products, fast food. Eh? This is a global research that was done. It's not just Kenya. Beauty products and fast food. Tukidemonstrate, mlikuwa mkisikia wakisema ati tunaendanga KFC. How did they know? It's because okay, it is good. It's not bad. Just have a plan for it. If you want to take yourself out, you want to treat yourself, you want to buy the iPhone 16, you want to buy the Samsung sijui gani inakuja in January, it's okay, you can buy, but have a financial plan for it. If you're setting aside money, set aside money geared towards it. Kidogo kidogo, pole pole. Don't go into rush borrowing or unplanned borrowing because of your lifestyle. Yeah, and you have, like I said earlier, the moment you understand yourself, you will be able to overcome the pressure that is coming from around you. So what I compare to kanyage vashas, you can be able to say no, I don't have that money. Juu unajua ukikanyaga huko, the next thing you will be on paying the bills. Okay? Na hiyo isemwangi kabla muende. So you need to actually plan yourself. Don't enter into rush lifestyle decisions that might end up costing your finances. Another thing is to invest to preserve value. Invest to preserve value. Invest to preserve value. Invest to preserve value. In other words, invest to protect yourself against deterioration of value. How can deterioration of value come about? If the Kenya shillings deteriorates, inflation rises, all those erodes the value of money, what we call the value of money. And they will always happen in tandem. When inflation rises, the value of money will always go down. So they always happen in tandem. So invest to preserve the value of your money. Now, number 4 under longevity risk is prioritize cash flowing assets. Cash is king. I hope you've heard that. Cash is king. There's a statement that says cash is king. Cash is king means you need to invest in a way that you're able to generate cash flows for yourself. Now, when you're calculating annual return, that is when you can measure it against, you can measure your income against other investments and other metrics. But your cash flows, that investment return at the end is determined by the amount of the cash flows that you're able to generate. So have investments that are able to generate you a substantial level of cash flow. Then number 3 is health risk. Health risk. Under health risk, avoid health. Activate preventive and curative measures. Activate preventive and curative measures. Preventive and curative measures. One of the products we also have at KCB is your health insurance, which is key. A lot of people overlook it until when it gets to a critical stage. So you can have a health insurance plan, and we are able to construct that for you. In the health insurance plan, you can be able to determine what amount you can contribute towards your health insurance. And other preventive measures, I'm sure we are aware: exercising, ensuring that you keep yourself fit, what you're consuming. These are the kind of expenditures that might help you avoid further losses in future. So exercise, eating healthy, avoiding stress, regular checkups, and a health insurance plan. So that is part of your health risk that we would also want to monitor. From where we sit as a group, we also don't want clients, we will not prefer our clients who have already begun an investment journey with us to hear that they have passed away because of a certain health condition, when we know very well that our health product would have covered that. Okay? So it's useless. If we begin a journey of investment with you, and then you begin to face challenges, and all of a sudden we realize you're no longer there, now we have to resensitize your family again about the investment product you had begun with us. It's an entire torturous game. So what we would want is our clients to also have a healthy lifestyle. The challenge I will mention as I close for men, one of the ways of reducing stress, be open with your partner about your investments. Be open. I can see someone is laughing somewhere. Be open with your partner about, for men. I want to insist that, because I would give you a case of some of our clients who have come. They are men. Someone was like, hey, Mr. Kingori, how are you? Niko mzima. Na madam ako wapi? Ako hapa town. Hapa tumemwacha tu hapa town. Why are you coming to the investment bank without your wife? Eh? Na tukiangalia kwa next of kin, the wife is not there. Are you seeing? Okay, it's across board, even women. But I'm insisting on men because most cases we have have come from from our gentlemen. Willing to work with your wife in the investment journey. Let them see the value of what you're creating. Because at the end of the day, when they die, their wives are not aware of the investments they have. What we have to do is we have to take that money back to Unclaimed Financial Assets Authority. And there's a lot of money lying there, goes back to government. And we don't know what happens in government. Do we? We don't know what happens in government. So basically that allow me to close my presentation at that particular point and open up the floor for any questions and clarifications you might have. Thank you so much. Thank you so much.
I feel encouraged, I feel informed, and I feel like hatuja appreciate our speaker vile inafaa. Ni kweli? Yes, so I want us to do appreciation in a different way. So tutapiga makofi mara tatu, then tufanye inaitwa ni kusnap. We snap thrice, then we stamp thrice. Sawa sawa? So we start. Hiyo ni riaso, naona ni kama kuna wenye hawajashika. So I want us we do it in a better way, okay? Before we invite Grace for kuchangamsha akili, and then tuingie kwa Q&A as we progress on. Sini sawa? So we redo that thing again. Karibu Grace.
Good afternoon once more. Good afternoon. Inua mkono kama uko na will. Umejiandikia will mahali, inua mkono, inua mkono, inua mkono. Naona ladies only, imagine Esther ako na will. I have seen another will there. Good job. Tuwapigie makofi. Na nataka tuwapigie tu makofi, nasema and because of that unawapla pia, and because they have a will, haya nataka tusimame ndio tu stretch kidogo ndio tuende kwa Q&A. So nataka hii ni self help. Hii self help inakuanga is on a Christian setup, sio? And I want us to see whether we know the Bibles, the books of the Bibles that we have. Sawa sawa. Tutafanya mchezo ya kusema Bible. Tukisema Bible unaruka. Sawa sawa. Nikisema jina inakuanga kwa Bible unaruka. Nikisema yenye iko unaruka. Sawa sawa. Nikisema yenye mwenzako akiruka kama iko hapa unamleta hapa mbele. Sawa? Sawa sawa. Sawa sawa. Bible. Bible. Joseph. Nani ameruka alet? Mwenzako kama ameruka unamleta hapa mbele. Haya, ilikuwa riaso Sawa sawa. Bible, Bible, Bible. Bible, Bible, Bible. Mary, Joseph, Ruth. Kuna watu hawaja jump. Ni wangapi wamejump? Mtu mwenye hata jump wakati na ni Bible unamleta hapa. Sawa sawa? Sababu hajui Bible yake. Sawa sawa? Bible, Bible, Bible. Bible, Bible, Bible. Joseph. Genesis. Leviticus. Mary. Nimeona mkorada kabisa. You know your Bible. Sawa sawa. Haya, let's have a seat and go to the Q&A.
So thank you so much, Grace, for that. I think tuko lively sahi. I want to invite now Q&A. Whoever mwenye ana feel uko na maswali, burning questions, it's now your time to ask those questions. Our speaker is ready to respond. Yes, start na wewe.
Hello. I wanted to ask what you returned for the bonds, the money market. Maybe when you look at it from 3 years, because I know the bonds have been doing very well, but that's not the norm. So what have you been returning in bonds, money market, and stocks as the KCB investment bank? Because when you talk about a typical portfolio, how do you divide it or how do you plan it?
Okay.
And so therefore, what is your average return?
Okay. Thank you. I didn't want to go into to give you so much of our products, but I'll let you know about how we're performing. So bonds, as you know, up to now we are having a yield of about 18%. 18% on your IFB. So bonds we have of two categories. We have what we call the IFB, that's the infrastructure bonds. And then we have what we call the normal FXD, which is your fixed coupon bond. We abbreviate it as FXD. So that is fixed coupon. The average return on that is about 17% currently. Now bonds pay coupon twice a year. So that's half year you get half of that, and full year you get half of that. So for FXD they are taxed. For IFB they are not taxed. So that's our average return on bonds. That's the local bonds. For money market, our the money market rate usually fluctuates. But for the last, I would say, 2 years, we've been oscillating between 14% and 16%. So what happens in money market is it's a pooled fund. It's a pooled fund. It's like what you have here as a self-help group. We can pull it together, put it as an MMF. So when someone withdraws, how the yield is calculated, first of all, is the amount we've collected for the month divided by the number of shareholders. The amount we've collected for the month will net off expenses divided by the number of shareholders. So when someone withdraws a fund from MMF, for example, the amount of collections reduces. When it reduces, that reduces our numerator. So the yield comes low. So as of last Friday, our yield was 15.32%. As of the previous week, Friday, our yield was 15.78%. I think in August we did 16.04%. So, but it fluctuates. And if you look at most money market funds, they oscillate between there. They are between 15 and 16.4%. Normally the competition is very, very minimal. The competition for money market fund, it's like apples. I mean, whether you buy at Marikiti or you buy it's the same. It's apples. The thing that you need to look out for when you're investing in money market funds, and what most investors miss out, is the financial institution backing the money market fund. The financial institution backing the money market fund. Because you can get a very good return, 16%, to a money market fund that has just started. They have just set up offices in any building here in town. Tomorrow morning, when you wake up, you watch the news and you realize the money has gone under. The directors have disappeared. So the question you need to ask yourself, if I invest in KCB money market fund, what are the chances of KCB failing after 127 years? All of a sudden. Okay? Ask yourself that. So the institution backing the money market fund is very important. How well capitalized are they? Who are the directors? Who is the custodian of the fund? Who is monitoring that institution? For us, we are regulated by many institutions, CBK, we have CMA, Kenya Bankers, all that. We're part of those members. Who are the professionals running that money market fund? For us, we are licensed. One of the institutions that licenses is that institution called ICFA, licenses financial analysts. So who are the portfolio managers? Are they licensed individuals to practice in Kenya? So those are the kind of things you consider when you're looking at a money market fund. Like I said, remember in the slide, do not just be return driven. There are many other factors because there are many investors who are return driven, then they end up crying later because they not factor in all those risks. Okay, that's money market fund. That's bond. For shares we do what we call shares vary. So normally, how we construct your portfolio would be different from how you construct somebody else's portfolio. On average, for the portfolio that we handle, I think on our we call it an equity portfolio. Our equity portfolio has registered a return of on average about 20% for the last two years. So on the equity portfolios, that is how it has also you should also take note of the fact that NSE did not perform last year. Okay, so what did we do as managers? We reduce our holdings in the equities portfolio. Okay, because when we anticipate that we're not going to see a good rate of return, we have to reduce our holdings. So we construct equity portfolio based on client preferences. There's some clients who want specific stocks also. Someone says, for us, we just want banks alone. Others come, they just want manufacturing and banks and all that. But a majority of our clients for the equity portfolio are usually foreign clients. So for the Kenyan equity portfolio, we balance that based on the client preferences and also after discussion with you as the client. Okay? Are you okay? Why?
You are satisfied, madam? Oh, good. Now we invite other questions. Maybe we can take like 2-3 questions and then he responds. That's okay.
Thank you very much. My question is to you is we have several young people here, some who just left school, some who have worked for 2 to 3 years. They've saved some little money, let's say 100,000, 200,000, and they're wondering, how just to start this investment. What advice would you give to such people?
For the self-help group.
Yes, they have some money in the self-help group,
Okay.
and they would like to, invest in something that would give them more
Okay.
returns. Yeah.
Okay.
Another question? Maybe before
okay.
you respond, we
Okay.
can take like 2-3 and then you respond.
Okay.
I was just wondering, is one able to also invest in foreign currency in terms of dollars or pounds? Yeah.
Okay.
Any other? The last one? Oh.
Thank you very much for the talk. Mine is on the first 2 slides you talked about. You talked about jumping out too early when things become very hard. Then there was a comment when you talked about biases, about overconfidence. How do you balance the two? How do you make sure you're not staying too long in an idea that really is not making sense, or make sure you have the stamina to stay on, and just when you're out of a very hard corner, then things start going well for you?
Thank you. Maybe you can respond to those ones and then we take the next set of questions.
Okay. Thank you. So I'll begin with how to invest 100,000 for the investors who are beginning. For the investors who are beginning the investment journey, we have this range of products that we sell. We normally recommend a certain path. So if you're doing regular investments, Yeah, monthly investments. The best product for you to begin with is what we call the money market fund. Why? Because money market fund works with what we call compounding effect. The rate at which you invest in today might be different from the rate at which you invest in 1 month from now. But now, because that money that you invested in January, it will still be compounded. February, March, April. If you invest in February, that one joins in. March, that one joins in. That way. And so at the end of the year, you realize a much more significant return. Okay, because it works with compounding. So at your stage, and I understand where you are, at that young stage, if you can be able to manage a certain amount monthly, you can begin from what we call the money market funds. From the money market funds, our minimum investment is 5,000 shillings. From the money market fund, you now build what you call capital base. You invest in bonds. You invest in bonds. Now, money market funds, we are beginning from low risk, moving to high risk. So you come to bonds. Once you have a significant amount built in your money market fund, we can buy you a bond. Now, a bond is a bond would offer you probably a much higher return, but it will now expose you into now the financial markets. You get to own what we call a CDS account, a Central Depository System account. You get to now own your own account where you can now invest in. Those are now financial market securities. It could either be a bond, we could buy a bond, or a treasury bill. Treasury bills are of three categories. We have the 3-month, 6-month, and 1 year. The 1 year treasury bill is like buying a 1 year bond. So, but normally, if you want a 1 year, we just buy a 1 year treasury bill. So a treasury bill will give you a return of, let's say, currently at the market, we are seeing about 14% to 15%. But now, if it's 3 months, it will be deannualized. That rate will be deannualized to 3 months. And then if it's 6 months, that rate will be deannualized to 6 months. So we can buy you a treasury bill or a treasury bond. Once you begin to get those coupons from the treasury bond, because they come in half yearly, you put those coupons back into the money market fund. Are you seeing how we are building you? So as the coupons coming in, you're putting it back into the money market fund, and it continues multiplying. Once it multiplies, the bond matures, you receive back your principal amount and the final coupon at that payment date. So once you receive that final coupon and your bond has matured, so let's say you had 1 million, you bought a bond worth of 1 million, plus all the deposits you've been making in money market, we can now take you and diversify you to equities, where we can now take you to shares, and we can buy for you a few securities here and there. So I would urge you to consider and begin with a money market account. That one is also very easy to open. You open with just your ID and your KRA pin, and then for us, you fill out a form. We are currently working on an automated system, but because it's KCB, the automated system cannot just be like everyone else. It has to be a super system. So that's why it's taking a bit of time for us to get that system ready. It factors in a lot of other. Yeah, we cannot just go into the market because we feel like going. It is tested. Yeah, we are working with global banks, JP Morgan, and such kind of banks to develop a super system that incorporates even AI. So that's why we are still using the form. But once you get the form, you just fill ID and carry, and you send, and your account is open. Okay. The second question was on whether we're able to invest in foreign exchange market. So the banks, I'll tell you something about forex. When I began my career, I began as a forex dealer. I remember we didn't used to have these brokers in Nairobi you see today. We used to use foreign brokers. The thing about forex you need to understand is banks move the demand and supply for forex, not individuals. The forex market is the biggest financial market in the world, and it's 24 hours. But unfortunate thing is that major banks are the ones that move those values. So you need to be careful about moving into forex, because you don't know which bank is demanding what currency at what time. You may not have access to that information. currently we don't have a product for forex. We don't encourage proprietary trade. We call it prop trading, proprietary trading for our clients for forex because of the risks that are involved in forex. As much as the return is be potentially high, but your risk also stands to be potentially high. So if you're getting into forex, I would urge you to walk a very meticulous journey. Be very slow. Operate what do they call it? Operate uh, um, a flash account for even 1 year and beyond. Operate that. They normally give you the option for opening a gaming account or something where it's not real money, it's virtual money. Run it for quite some time. Be very good at it. But you need to be very good in your economic macros. You need to be very good in your data analysis, your technical analysis. Be very good at those. Don't just rush in putting money into forex. So as a bank, we are not allowed, because remember, we are a regulated entity. We don't just do things like the street here. We cannot just take you to something that has a lot of risk for the sake of risking your money. You'd rather build your wealth in a methodical manner, because for us, we are interested in preserving your wealth, not making you rich, creating wealth for you over time that will last for generations and beyond. We are not interested in you investing today and becoming rich tomorrow, because that is not a sustainable way of building wealth. Yeah, so you can try, but be very careful. Currently, we don't have a product, unfortunately, for forex, but we do it on the bank side. So the bank side, we have a proprietary book where we trade forex. That's for our own, and we also do it on a portfolio level where the portfolio managers can include that into their portfolio for clients. So only professional managers are allowed to do forex at the moment. Okay, and then how to balance overconfidence and was it harding bias? Yes, giving up so easily, and how to realize you're in the wrong investment. I think I've had clients who have realized that in the middle of the investment journey. But the good thing is that with us, we want a personal relationship with you where you can talk to us about how you feel about your investments. And we can tell you exactly what is happening in your mental state. Because we handle so many clients at the same, who have faced the same states of mind. And we've been able to walk them through out of that situation. So I would advise you majorly, have an expert who understands the phase you are in business. There's something in business studies we call the business life cycle. I don't know whether you've encountered it, where the cycle goes into expansion, growth, expansion, and then decline. So in those different phases of the business cycle, we have different emotions that accompany entrepreneurs. So until you talk to an expert who understands where you are, where your business is, and understands the emotions that are accompanying you, unfortunately now it is like, what should I call it? Financial therapy. Yeah, financial therapy. Let me recommend financial therapy. Eh? We can coin that term to Leo. Financial therapy. You have to talk to an expert, and an expert will guide you through how to overcome those emotions. There are businesses that we can tell, if you give us your statements, the projections may not be looking very good, and the business model may not be even viable to begin with. So if you're able to get an expert who understands how to value a business, how to understand also the emotions that you are facing as an entrepreneur, then you can be able to navigate that very easily and very quickly. And we've had clients who overcome that over time, and they've grown businesses. So it's possible. Thank you.
Yeah. Yes. The next set of questions, I'll start with her. Yes.
Good afternoon, everybody. I want to echo a question, and you have answered. He has asked that question, and he has asked that question on behalf of the young people. And I have remembered when I was young. And I don't want the Gen Z or the young people to fall in the pitfalls I fell. And maybe, just like how they say, vitu ni different kwa glau. Huh? I learned that the hard way. If I've not even ever shaken out of that fear of investments. And I'm saying that because I'm in the fourth bank. Since I started working and trying to invest here and there, and these 3 banks, I'm not going to mention them. It might be one of your bank, but it's not good to throw stones to that person who is talking nice to you. And the experience I had, which I would not like these young people to have, is the first bank. When I was just employed, she went to it's a big bank. In fact, the 2 banks, they are very big. So when I went, we used to have tellers, and those tellers were marked. If you are withdrawing 2,000 to 5,000, 10,000 to 15,000, 25 and beyond. So of course, me being young, I was in this youngest, 25 to 5,000. And what discouraged me is because when you are studying there, you see the counter has been crossed, use the nearest. And you know, the nearest is only the higher one. So to go back and ask the customer care, where do I go? But just wait, we are going to check. So you find that somebody has come with a bucket. I thought, Olagonia, these gunny bags. And I was asking myself, what are these for? And when they come, then I'm removed from my counter. And now not serving. I see it's not serving, but that person ameingia na huko ndani. Do you know hiyo ilikuwaga pesa? One time I went home crying because I could not understand. I was done that 2 times. The third time I crossed the bank. So I went to another one now. At that time, they were taking me very well with others. It's not only me. And I know even you people, some of you who are my age might have experienced that. So that one, I went and opened for my children. Hii inaitwa aje? Young nini. But one day I got a choker. We were told the minimum is 20,000 for every account. That time I was in this middle. So I closed the account one day. And I was very disappointed. When I went to the third bank, something else happened. But I'm telling you, the fourth bank, now sijatoka na sitoki hivi karibuni because imenitunza. Let me come to my concern now. When I was going for investments, those 2 banks, we had some talks where I worked. So we were told you go and you open even these treasury bills. But when I went, these 2 banks, 2 times, the treasury bill was 500,000. If you don't have 1,000,000 or 1,000,000, nothing. The second one is 100,000. I'm hearing is 5,000. I hope you maintain that. But do you know, all those people who are giving us the talks, when we went to those banks, we were trying to look for them, we could not get them. I hope when they come, these young people, they can at least say, we were given a talk and we were told 5,000 and they'll get you. Then I opened a CDS account. And then we started getting the shares. I had 4 different types of shares. But I'm remaining one. And even I don't know how many nini. Because you only talk with the CDS account. And then you are pushed a retro amount of money, you even don't know how inaendelea. Now, why I'm saying things are different kwa grao is because I don't want these young people to be discouraged like me, because hata wakati nilitoa hizo shares sijarudi tena. Now, when we come to the banks, this is now my question. Why don't you put somebody who is really who knows what happens in your banks? Because when we come to customer care, sometimes we are told, I think you can invest in money market, but try this, try that. But we don't get either solid. And I would not like the young people to go. Does your bank have that? That is my question.
Yeah, good afternoon. Thank you for a very nice presentation. My question is, in your experience, have you had situations where financial advisors either misread uh, the trends? And so in giving advice, sometimes they give advice that lead their customers not to benefit, but they suffer not to benefit from the investment. And in those situations, what is a customer supposed to do to guard against wrong financial advice? Because the financial advisor has not correctly either analyzed the situation or that probably the analysis failed to take into account certain situations that ought to have been taken into account. The second one is whether, in your experience in our market, you have found situations where there is cartel-like behavior, so that there is insider information and some people might be misread, so that they enter into the market the long time and they suffer as a consequence of that. And again, what would a customer in those kind of situations do to avoid situations where they are misread?
Yeah, the last question, Mark.
Okay, mine is very simple. Both to our self-help group and the MMF. If you are saving, is it advisable to save monthly, or maybe you can save in lump sum, and by the end of the year, you can find the returns. Maybe if you save monthly is higher. So kindly advise on that.
Thank you. You said your name is
Mark.
Mark. Oh, pleasure to meet you, Mark. In fact, I'll begin with yours because yours is very nice. All of them are nice, but yours is juicy. I would say yours is juicy. For the self, I'm here for the self-help group particularly. So for the self-help group, in fact, what we're offering the self-help group, you as a group, we're offering you personalized service. So your product is not something that I can tell you has been in the market. No, it is something that we are proposing to sit down with you and your leadership, and we construct for you a portfolio based on what you have and how much you are contributing monthly to ensure that you have at least an above average return from what you're making. Number one. Number two is to ensure that your funds are also safe. Remember the factors I talked about: tax, inflation, and also for safe from any other form of infringement into your capital. So that is something that we can work with KCB Group. So as KCB Group, when we are meeting Japheth, when my boss was meeting Japheth, the idea behind it was we need to sit down with these guys, construct for them a portfolio, tell them this is what we're gonna, this is how we are managing your funds. We want to be the ones to manage. We will show you how we are allocating. What are we investing in? What and what and what and what, and based on the risk that you can take, how much can we maximize the return out of it? And like I said, key to note is we are not interested in risky investments in the form of promising you high returns. We're interested in building you wealth in a step-by-step process. So investing monthly or investing annually, it's up to you. That one, it doesn't matter. The question is, are you investing? Because the graveyard of investment is full of investors who started and failed or stopped. So the most important thing is, are you willing to embark on that journey? Are you consistent about it? And with time, you begin to realize growth and potential growth. Remember, if I give you 20% for 5 years, if I give you a 20% plus on your investment for 5 years, at the end of the day, I've given you 100%. If you make 100% this year and you make negative 50% next year, you're at negative 50. And if you continue making negative for the rest of the 4 years, but you made 100% in the first year, you'll be back to zero. So which is better? I give you a return of 20% for 5 years consistent, or I give you 100%, which can be lost next year. You get it? So the point is to build you as a self-help group and to build your capacity as a self-help group. We don't want to promise you risky investments. I don't know Forex. I don't know what. We'll give you what. Yet we know the following year, we will have to face you again and tell you, oh, this one went south. When we should have just invested in a perfect portfolio of bonds or money markets, and we would have given you a sustainable return at the end of the year. Because you'd rather go walk home with 20% than walk home with nothing. They say a coin in hand is worth more than nothing. So the other question was whether we have a representative. Ma'am, let me call you ma'am. The good thing I'm here. You see, I've come with a pack of cards, and anyone can take. I have so many cards there. If you walk into KCB, just say I am going to see Jesse. I will meet you hapo Kencom. Kuja tu Kencom, useme unataka kuona Jesse. I will come down to pick you. Sawa. Sawa. So for our young people, I guess the information is the same. Like I said, it is better to invest than not to invest. Now, one of the things we have heard from mom is what I talked about: hindsight bias, regret. I did it; it pained me, so I'm afraid of doing it again. That's what we have investors who are still nursing the pain of the past of what happened, which is normal. It is particularly perfectly normal for us as human beings. And so what we're saying is, learn how to now manage that bias. You may have invested before and lost money, but when we say it, you go back to the drawing board and ask yourself, what led to my loss in the investment? Self-awareness. Ask yourself, interrogate yourself, and then find out what you want to do as part and parcel of your purpose. Now, when you come to us, we will now tell you, oh, you lost money through shares. I have investors who've lost billions through shares, a lot of money through shares, but then they have also gained a lot through the same investment. And the key point is, one of the weaknesses I talked about, most of the time you will find they are being driven by return. Oh, me, I want more money. Unajua hao wengine wanapeana pesa mingi, hao wanapeana pesa mingi. That is number one cause. And so as young people, you need to watch out for that. You need to watch out for that. Unfortunately, I have come to learn personally in life that the only way to true and sure wealth is by working hard. Working hard, I mean working in whatever purpose God has called you for. And number two, working to invest, or your investments working for you. So these get rich quick schemes are usually what destroys people's lives. Get rich quick schemes. You'd rather work for your money, invest it wisely, and grow it gradually. Don't be return driven. Be rather wealth driven. Wealth driven is about purpose. It's about looking at the longer term view. It's not about looking at the short-term return that you will make. So as young people, take advantage of that. It's one of the advice that has really helped me personally in my journey. And so we are working on a robust representative program. Though at KCB, if you walk to any branch right now and you insist you want to buy shares, you will always be referred to the team of financial advisors that we have currently. In fact, all you need to say is I want to invest. That's all you need to say, because the KCB group has only one investing arm. Okay, and we cater for all clients, all investors. So you should never walk into even if you walk into a branch and they tell you that we don't know about that, just tell them I want to talk to investments, or I want to talk to Jason. You just say that, and they'll connect you direct to the investment arm. Do we have a case where we have had financial advisor misguiding? I believe that was the question. Misguiding or the customer being misled. So those kind of cases, we used to have them prior to the regulation that came out, which was the Investment and Financial Analysts and Managers Act of 2012. So that brought what we call regulation into the market. So that's why I say it. All the financial advisors you meet at KCB, including myself, are members of the society. We are like chartered accountants. So it's the same. So after that act came into effect, now we have more streamlined way of engaging with customers. So the cases of misleading customers is hardly zero, because what we'll tell you is exactly what is there on the ground. The returns I've told you, if you go to CBK and Google CBK treasury bill 3-month, you'll see it's 14 point something percent. You'll see the 1 year at 15. So and part of our regulation is not to over guarantee customers. That is why when she asked a question, I was not eager to give a very high rate of return to boost your excitement. I'd rather mitigate, cut your expectations kidogo. So we are not allowed to over promise our customers. We are not allowed to give you rates that are astronomical. But of course, if you invest with a good portfolio manager like KCB, what do you expect? But I cannot guarantee you that at this stage. Why? Because it is not those kind of returns are not usually guaranteed. They are not sustainable, and they carry a high amount of risk. What you don't want is to risk our clients' portfolio. That is why I don't want, and I hope, and I know in future, you've heard of SACCOs. We wake up, SACCOs are scrambled down. I don't know. This money market is no longer there. There are people who are chasing their money in some of these offices, up and down, low courts, up courts. At KCB, we don't guarantee you significant, exorbitant returns above normal. But what we guarantee you is investment safety for your investment. That's our number one goal. Okay. Cases of insider information is illegal and is prohibited. And normally that affects dealers. So those of us who go into the market, those of us, normally we're called dealers. When we go to the stock exchange, you would find people having privileged information on certain shares. But that I have not heard of that case in Kenya, particularly in the recent past. I think some of the last cases we had must have been around 2011, 2015, which were dealt with. One other thing is CBK today monitors banks very closely. CMA is very sharp in monitoring investments. So before a case of insider information happens, I think that will be beyond what I've seen in this market. Yeah, but the cases of insider information are largely not there. Yes. Thank you so much.
So I think we are going to the next set of questions. We'll start with Andrew, and then her, and then him, and then now you will follow the next set. Okay? So, Andrew.
Thank you, Jesse, for a great talk about investment. I would want to ask a few questions on behalf of maybe the silent majority. I know you have mentioned some of them, but maybe you can give a clear procedure. First, on how to invest in the bonds. I think you have said so much about bonds, but a lot of us don't know how or where to start in terms of investing in bonds, either through CBK Direct or KCB. Probably you can also mention much more about the money markets, how to do that, how to get into that space. You also mentioned about the health risks. Maybe you can give us maybe a better picture of more detailed picture of where the life insurance comes in terms of your financial planning. Thank you.
I think my question was actually partially mentioned by him because I wanted to ask, do I have to buy it through the bank or can I do it personally? When it comes to the money market, the bonds and the shares, can I do it personally or it has to be done on my behalf?
Gentlemen.
Okay. My name is Eugene. My senior ameuliza question nimekuwa nayo ya kwanza, but I have another one. We have some people who get money inakujia pamoja. Just the same way alikuwa ameulizia investing polepole na kuinvest kitu moja. Maybe you have a project that you will earn good money from it. Do you think is it good to invest in money market or to invest in a sacco? Because sometime when you get good money, unaweza kimbia kwamba wacha niweke kwa sacco, but according to you, what's the best place to invest this money? Thank you.
Hello. Okay. Investing 1 billion, 2 billion. Okay. So, let me see. Okay. How to invest in bonds and money market? The question was asked by chairman. So you can invest in bonds through KCB, or you can invest directly at the CBK website. But the important thing is you need to select your broker. You cannot invest without a broker. So both shares and bonds, you could use the app, which is what you call the OCSD for bonds, and then you could also buy. Like if you want to buy directly from CBK, it will take you a process. You would have to go to CBK, get the pink form, fill it out, wait for it to be approved. So what we do as a broker is we remove the entire process for you for going through the approval processes in CBK, and so you're able to just open an account seamlessly. CBK opened what you call the CBK DOWCSD, DHOWCSD, where you can open an account personally and invest, but you will be required to select a broker. You'll be required to select a broker. That's where KCB Investment Bank comes in. Okay. Same thing with shares. You cannot trade shares physically by yourself. You have to trade through a broker. And who is your broker? KCB Investment Bank. Yes. So for shares allow through the broker you can issue instructions to the broker. You say I have this amount, I'd like to buy these shares. Or based on discussions with your broker, they can advise you on the best shares to buy. So what we normally do as KCB Investment Bank is every month we issue out what we call stock recommendations. Those are shared to only our clients. And our clients are already in our WhatsApp channel. We have a WhatsApp channel. So in the WhatsApp channel, normally monthly we send the performance of the markets, and then monthly we send what we call stock recommendations. So these are the ones we recommend that you would buy for the month, based on our analysis. So you can see there's an intermediary there called a broker, which is which is critical for you to access the markets. So yeah, if you contact us, you want to open, you'd like to trade shares, or you could even be on the CSD app and you're stuck, you could still call us. We will guide you through how to upload, how to open an account, or you could still walk in and request that you would like to invest through us. All those means are available. You still be able to acquire a bond. For shares also is the same way. Approach us, tell us you'd like to buy these shares. Okay. Um, money market, like I said, money market, you open an account with us. We'll send you a form you fill, attach your ID, attach your KRA. You can do that personally. You can do that at a personal level for bonds, for everything. You can do that at a personal level. So the one for a group, that's a structured product. That one we sit down with. You guys have your meeting with chairman and everybody, and you decide, oh, let's work with these guys to build our group portfolio. So what we'll do is, as we will come, we'll sit down with chairman and the leadership, and then we'll construct for them what we call an investment policy statement. The investment policy statement will list what we recommend as asset allocations. How much will we put in bonds? How much will we put in equities? How much will we put in other funds and all that? And then that we will present to you guys and you approve. Okay. So for the group is much different. How can we incorporate health insurance? Health in life. Yes, life. Life insurance, we have that as a separate product. Normally that one is managed by what we call the KCB Bank Assurance. So they have a life product. Normally what we do is we can just advise you at a personal level, based on how much you can allocate towards your contribution to your life savings or to your life insurance vis-a-vis your contribution to your investments. But a life product is there, and I think they take contributions from 1,500 all the way up. So, but the component of life saving is also important in terms of ensuring yourself as a person, and in consequent ensuring your investments. So life is one of the insurance products that you can take up just to protect yourself and to make sure that you are insured. MMF or money market or SACCO, like I said, boils down to who are you investing your money with? Okay, who are you investing your money with? It's the same question. Of course, I understand that with SACCO, you can be able to get the loan facility based on your contributions, though. But one thing you also have to be careful, like I said, also with other money market funds, is also what institution are you saving with? Now, for us at KCB, we normally monitor SACCOs in terms of financial performance. So we know there's something we measure we call capital adequacy. How adequate is their capital? We monitor all the SACCOs in the market, and we normally observe and we could tell prior the performance of some of these SACCOs going into the future. But more importantly, even if you invest in SACCOs, is you monitor the SACCO information through the SASRA. The SASRA website, they normally issue out reports on SACCO performance. So be very careful as you're investing in SACCO. It's good. It's a good means of saving. But I would not compare that to money market, because it's like comparing apples and oranges. SACCO is a very different motive. SACCO is just for saving. It's you for saving and accessing your credit facilities. When you're talking about investing, you're talking about denying yourself something now for the future. Okay? So it's not just to open an account, let it run, and then you're able to get facilities out of that. No, investing is totally different. Investing is this amount of money you've saved. This one is siguzi, juu chini, siguzi yo, for the sake of the future. Okay, so there are two different products. But if you come to us for advice, we'll be able to sit down with you and advise you accordingly how you can structure yourself. You see how much you can put in SACCO and how much you can put in money market. But when you're looking at the two things, they are totally different. Same thing with insurance. Insurance is totally different from investing, because insuring, particularly that is now life. When you talk about life, you cannot compare life to any other thing. So insurance is a totally different product. You're not looking at returns when you take an insurance policy. You're looking at insuring yourself. For us, we might be more skewed towards a return. Okay. Thank you. I don't know if there's any question I've left out.
Yeah, maybe we continue. I think the responses you are getting are in good progress. So I'll give the next 3 sets of questions, and then maybe the next, maybe 2 or 3, and then we conclude. That's okay?
Okay, thank you very much. My name is Asienwa. Uh, okay, before I ask questions, I want to thank the management and also as members who are here. I think we have learned a lot. Also, Mr. Rudenyo, thank you for coming. Now, my question now come now. You know, I'm a member of St. Paul Herb Group here, number 293. Okay, the farm one. My question is it possible or is it helpful for me to take a loan from St. Paul Herb Group? I come and invest in IFB bonds, you understand what I say? Is it possible? Is it okay? Number two, you spoke of stocks, KCB. You had a loss, yeah, 2 years, and then you covered. So, how can you advise us? Because Kenyans, we panic quickly. We sell and move, and then you see after a few years you make a profit. Last one, you spoke of your MMF is 5,000 minimum, but we have other MMF they're offering as little as 100 bob. So how are we going to compete with those people? Because, or 5,000, it means you are at a higher cadre than those of 100 bob. So can you explain there? Thank you.
Thank you. My question is almost the same as his. You have talked about investing in bonds, and we realize that bonds are long-term investments. Some of them go for 5 years, others 10 years, 20 years. And my question is, if one has invested in bonds, let's say probably you invested when the rate was like 11%, you invested in a 10-year bond, but currently bonds are going for 18%. Is there a way that one can liquidate that bond of 11% and invest in the bond that is 18%? That is one question. The other question is, you have talked about
Bank was to close and everything was to be sold off, and then you are left with us. How much would you get? Okay, in your investment. What are the prospects of this bank improving performance? If it is manufacturing, EIBL, what are their sources of raw products? They have wheat. Does it come from the western part of the country? Okay, what do they import? They import a business before you come in for purchasing of shares. And particularly that one, you get to engage with a financial advisor. So if you contacted KCB today and said, I would like to talk to an analyst or an advisor about shares or whatever, or Bamburi or BOC, then you will be assigned to a specific analyst covering that stock. Okay, because what we have is we have an analyst team. Their work is to analyze the stock market, and those are the guys who come up with the monthly recommendations. So by the time you're seeing a recommendation on your WhatsApp, buy, let's say this, sell this, it is that work is done by analysts. Analysts also attend the analyst call. They get to meet the directors, the MDs, and they ask them some of these questions on your behalf. So that's why it's important for you to get attached to financial advisor. Because at KCB, it's our job to take that information and bring it to you in form of recommendations. Okay. Can you take a loan from the self-help group to invest in a bond? Eh, loan from the self-help group. Okay, that is a very risky endeavor, sir. Eh? That's a very risky endeavor because, I mean, there are different factors to that transaction. What rate are you getting your loan at? Okay, what other charges are coming with along with that loan, apart from the interest rate? Uh-huh. Okay. I've handled such before, but I think before you come in for such a move, I would really want to check your financial status to make sure that you are confident you're going to be able to pay back that loan comfortably. If you can be able to pay back that loan comfortably and you see it as a calculative risk, where that difference of 6% you can take advantage of it, well, you can. It's possible. But I would advise, why don't you just invest through the circle? Because the circle, the self-help group, if God wills, we construct a portfolio for them, we will invest in the same bond that you're going to buy. So at a personal level, you can, but I would prefer if the self-help group invests, the total funds, because then the return is higher. If you're the self-help group and you have a pool of, let's say, 10 million or whatever, and we go for that particular bond, that's quite a significant number for the group, yeah. But it's totally possible. We've had clients who've taken loans for that, particularly in this season where interest rates have been high. Some clients have taken advantage. They take the loans at lower rates, invest in bonds. Okay, so that has happened. But there was a more interesting questions around whether you can be able to liquidate the bond. Let's say you purchased at 11. It's totally possible. You just write to us, tell us, I have this holding, I need to sell it, I need the new bond. We immediately execute it for you. Now you'll understand that it normally takes roughly about three days or so, 3 working days, because what we do is once you give us the instruction, we will go to the market. Now in the market we have other dealers like us, so we have to find who is selling that bond so that we can buy it for you, or who is willing to buy your bond. Okay, so that matching of dealers takes a bit of time. That's why it takes us three working days at minimum, but it's possible. You can sell and rebalance investment portfolio. So for portfolio management, we'll do that for the group. So if you allow us as a group and we get into an agreement, we get into an investment policy statement, we will manage your investment portfolio for you as a group. For individual, you have access to our financial advisors who will now give you personal finance advice. Because why am I saying this? Managing a portfolio for the group takes a different skill from personal financial management. So that's why we have financial advisors for personal finance, and we have portfolio managers for portfolio management. So for the group, we construct what we call a portfolio for you. But for personal finance, you can get a personal financial advisor. Hey, sorry. Pole, nimeongea sana. Any question nimeacha?
The last set of questions, eh?
Okay.
So before we ask the questions, your question is yet to be answered, eh? Sawa, kidogo tu. Before we go to the last set of questions, a request to all of us. Naona mapochopocho imeanza kuandaliwa hapa nyuma. So kindly let's not walk out so that we finish the questions and then we do a few announcements and then we conclude the meeting. That's okay? So maybe you can respond to the question and then we go to the last set of questions.
Remind me your question, please. Sorry.
Thank you. I only asked if there is any unique product that KCB offers.
Yes. So KCB has a unique product that we are currently launching. Actually, we're just about to launch it. So it might be privileged information for you, but I believe you are good investors, and I believe you are lions. Sindio? We are launching what we call a wealth fund. So a wealth fund will be categorized for specifically heavy portfolios and high net worth clients. So that's what we're about to launch, and it's going to be a cutout product. And it will involve part of what if we move forward together, we'll work with you in that product, where we sit down with you, we construct a portfolio for you. That one is out for minimum investment of 1 million and above. So are you seeing why it's valuable for the self-help group? So if the self-help group comes in, it comes under that umbrella because now you're a significant customer. So those are the kind of customers that, like you, when you call and we are cooking, we have to leave the pot Yongwe to address you. So yes, that is the product coming up. Okay.
Hello. Oh, hi. My name is Ruth. I had a question when it comes to the source of funds for investing. So for as a young person, you said you can have maybe employment income. So I just wanted to know what's the place of private pension for young people, because at some point you might not be employed or you don't want to do business, so you want to get money from somewhere else. And at the same time, because we are young, getting a pension right now with a good investment portfolio can help a young person later in life. So what's the place of private pension for young people at the moment?
Good afternoon.
Good afternoon.
My name is Grace. The question I had also is on pension and whether you can take your pension and invest in the MMF fund. The second question is, how do you balance between investment and expenses? Because and at what point do you stop investing and start now enjoying your returns? I've seen many people who are 70, 80, 90, they are still investing a lot of money in houses and very long-term investments. So I keep asking myself, how many years do you still have to live to make such investments? So my question is, and the last thing I've seen is a person who has an old man who died last year, and when he was taken to hospital, he was told he died because of hunger, and his account was a very fat account, and he had investments, so he had invested so much. He had a son who, on hearing that the father was dead, he went to the showroom and bought a brand new car. So my question is, at what point do you start now enjoying the returns from your investment? How do you even balance so that you don't invest everything and then you leave yourself without money for your consumption? Thank you.
Okay. Okay. Please.
Okay. Thank you, Jesse, for this good presentation. How long has KCB been in money market fund?
Okay.
Okay, no, there's gonna be a follow-up
Okay.
question. I just
Okay. We began the money market fund. Okay, so our money market arm was previously under NBK, which has been in existence since 2009.
209.
Yeah. So now
So it
with
was previously under NBK.
yes. So now under the new merger where we acquired NBK, they moved into KCB.
Okay, thank
Yes.
you.
Yeah.
Okay, so the other follow-up question, sorry, just give me a moment, is like, okay, so money market fund was typically a product of the insurance industry, right? The CICs, the Britons, the old mutuals. It was typically that. But now I am seeing the banking institutions enter into the money market fund. Yeah. And you have talked of 14%. I see it in the newspapers anyway, variance of 14 to 16%. The banks are doing that. But this product with the insurance industries is typically remaining at between 11 and 13%. So I just would like you to speak to what is the variance? Are the banks in money market fund for long haul or short haul? because this was not their product typically. And like, so why are we seeing those variances? Yeah. And just for my understanding, and because why would I'm with CIC, I'm with Britam, why would I leave CIC at 12% and go to KCB for 14%? Yeah. Is that, more stability there? Because it's historically their product, or should you be moving to the banks?
Okay.
Thank you.
Okay.
Mine is just a clarification. You talked about somebody has done the investment in the treasury bills or the bond. And as per the time when one did the investment, it was at 14%. And now, just for example, it's 18%. And you said that you can still recall it and apply for 18%. Are you recalling upon maturity, or why are you recalling it before it matures and get into the new interest rate?
Okay, why are you recalling it and getting into 18%?
It has not matured.
Okay, so I'll begin with that one. I can begin.
Yeah, you can begin.
Yeah. So for bonds, it's not you're not recalling. You're actually selling to buy another one. Okay. So if you had a bond that is, let's say, 11%, a bond you actually buy. In fact, in traditional, back then you would be given that bond certificate. It's only that nowadays it stays with the CDSC. So you're actually selling to get a higher yield at 18%. Most investors do that because they are chasing that coupon. Because you would find a recent bond has been issued at 18% coupon. So why would you continue to be getting your 11% coupon when you can get 18% coupon? The challenge usually is they face a lot of demand. A lot of issues that come of recent, we call them on the run, they have a lot of demand. So getting them becomes very, very difficult and very expensive. And number two, normally we advise, instead of selling to buy, if you have enough capital, you can just buy the new bond. So that one runs at 18%, this one runs at 11%. Because ideally, when you're coming into bond investing, you're investing for the medium to long term. Okay, so you're looking at 3 years, 4 years, 5 years. Why would you sell a bond that you are targeted to receive, for it to mature at, let's say, 8 years or a 4-year bond? That could point me to some liquidity challenges you're having or some behavioral biases you're having. Eh? Yeah, you could rather just be patient for your maturity, and then you can if you have enough capital, you can buy the new bond at 18%. You're saying something? Yeah, yeah. Exactly. So yeah, I was coming to that. The second challenge is the price. Yeah, so you would actually, in fact, for the new issues, you would normally not buy them at par, because at par is usually already sold. The fund managers, the portfolio managers, they're the ones who take up the bulk. So you would buy it at aftermarket, what we call secondary market. And secondary market, you'd have a premium. So you'd find it's trading at maybe 110, 109, 111. Oh, somebody's clapping for me. Thank you. 110, 109, 111. So you'd buy it at a premium. And you'd sell the other one most possibly at a loss. So if you net, I mean, the cost would definitely hurt you. Yeah. So basically that. Before I forget, there was a barrage of questions. The source of funds and private pension for young people. Like I said, pension facilities. And I think I'll answer the two questions with what you asked at the same time. Pension facilities are part of the insurance product. They are not part of the investing product, but they are also critical for your financial well-being. I personally have a pension plan, separate from the employers, which is also good, because you're also looking at your financial safety post retirement, or when you're not able to work. So pension is a very good facility, but I will not compare that to money market because money market is quite different. Money market is, like I said, investing. That is investing. And when you talk about how to balance between your expenditures and your savings, we normally recommend as financial advisors that your savings part of your income is deducted first. Savings or investment part of your income is deducted. So we are not saying deny yourself spending as I invest everything. No, what we are saying is that plan your finances in such a way that your investing income is like a standing order a deduction monthly, so that you also have enough to spend for yourself and enough to do other things. The focus is not in investing. Let's say if you open a money market account and you have a standing order that every month wakuwa anatoa 10,000 sio imetoka kwa akili yako, hakuna mtu hakuna kitu inakusumbua, so all that you are left with is now to spend the rest of your money the way you'd want to. If you have an insurance plan, also do the same, or if you want to take up a retirement plan, is the same, a pension plan is the same. But what we're saying is that investing should be a part of your budget, should be a part, it should be in that number, and it should be a critical number, and it should be deducted, and don't meddle with that. That is how you'll grow wealth. Now, when it comes to enjoying your wealth, once you want, once you have built a wealth portfolio and you would like to enjoy. By the way, we have investors who invest for travel. Ideally, it is for a goal. Okay, you could actually do it for a particular goal. We have clients who come, and most of them are, again, like you said, the Gen Z. They say, "Me, I want to go to Dubai in January." Yeah, and when we look at Bonify Adventures, wanna charge 75K. So 75K, and you can set aside 10K every month, ama 8K every month. Si tutakufikisha Dubai in January. Yeah, so you could actually invest to spend. Alafu ukirudi unaanza. Sawa, unaanza MMF. But sasa kuna wale ambao, what I was talking about earlier is investing for wealth creation. Kuna wale who want to build a portfolio for their children and children. So at the age of, let's say, at their hey years, or even when school fees, when you begin ukiwa young, wakati school fees zinaanza kuja, you have a significant amount to offset your school fees liabilities and all that. So you can still have fun, but all we are saying is you can plan your investments, plan your savings, and plan your finances in general. Have a meticulous plan towards it. I know for saizi, for young people, they enjoy traveling. They want these outdoor activities and all that. That is perfectly okay. As you mature, you get to a point you realize you have school fees to pay, you have a house, nyumba ya kulipia. If you have a car, you're servicing a car loan and all that, and you may not have that luxury to spend all that. But you see, if you have already begun an investment plan, you can offset that, use your current salary at that time to go to Mombasa for your holiday. So, but don't focus on investing that you kill yourself at it. So, that is where we now come to money being toxic. Yeah, and then okay. There was a question on why leave the insurance, the insurance arms and the money market. Yes, money market was ideally an insurance product, but I would say some of even the older firms in money market, you might realize, may not even be insurance. We have, of course, some have now gone under, but you realize, insurance firms used to hire fund managers or investment managers to go and manage for them the money markets. Now, where were those investment managers based? They were based in banks. So that's why banks have realized that they might as well provide insurance and provide investing. So it's not just about an onslaught against insurance, but the entire industry is changing. When you look at the global banks, they have actually been funded by the investment arms. The investment arms are actually bigger than even the bank. JP Morgan, Merrill Lynch, all these are investment banks. Goldman Sachs, those are investment banks. Okay, and these are the biggest banks in the world. So ideally, the goal of finance, the role of finance, and I normally tell even my fellow professionals, is to create wealth. If a bank cannot create wealth for you, you would rather look for a different investment, because the goal of you saving your money is to create your wealth. So even us, I know we have a fixed deposit product, but and we realize that most customers are angling for wealth creation. So if you're angling for wealth creation, can a fixed deposit product help you to create wealth creation? No. And so most of our consumers of the fixed deposits are the pension fund managers, those guys who manage the large pool of funds, because the retail investor wants to build wealth, and therefore you have to meet the retail investor at their point. You cannot keep on neglecting the retail investor, and that is why we are here as the investment bank. And I can tell you for sure, the investment landscape is changing. The banking landscape is changing. The investment banking arm is becoming much more profitable by the day. Why? Because investors are able to realize a better return from their normal way of banking. So, unfortunately, it's a market trend, but it's changing. But you would be safer. You would be safer. You would be safer with the bank. One, because the bank has the liquid capital, the liquidity. We can finance the liquidity in case there is demand. You see, for insurance, the insurance managers might have locked. They do what we call investor profile matching. So if they are managing a pension or an insurance for 25 years, they would have locked with a bond worth 22 years. So if they think about liquidating that bond to pay some emergency fund, it becomes a challenge. Now, for us as a bank, it's very easy. If we need to liquidate a certain demand for a client for 25 million, we just pull from our deposits, we liquidate, and then we'll net off later. You understand? So for us, it offers for us much more flexibility. And that's why you can see the returns are much more higher, because we're able to leverage on the different arms of the bank. We're able to leverage on so many arms of the bank to generate for you a superior portfolio return. How long? Oh, yes, yes. Like I said, we took our money market from the NBK that had the money market running. The KCB Investment Bank itself has been in existence since 2011. Okay, so when the money market came from NBK, it joined the asset management. We call it asset management arm of KCB Investment Bank. Yes. Yes. Yes.
Yeah, I think, yes, at this point, I feel we've asked so many questions, we've gotten so many responses, and I just want to give the last two.
For the pensioners, which would be the best liquidity system that they use to put their money, because they must have liquid money. Otherwise, when you are a retiree and you have assets, it will not benefit you. You have to have something liquid to survive, especially when you are on your wee years of your life.
The liquidity, right?
Yes.
Okay, for pensioners. Okay.
So maybe before you respond to the questions, let her just say her comments, and then you respond to the questions, and then we conclude.
Okay, hello everybody. Lydia is my name. I work with Dime Blair Investment Bank. Our friend here has done a fantastic job, but I think it is in pockets. A couple of weeks ago, we had some Kenyans being swindled because they were expecting a 23% return on investment per month. I do not know why anyone in their right mind would imagine such a return is practical. It is not. And I realized this because when we were discussing, we realized it because a lot of Kenyans don't understand what is a return or really what to expect in a return. Even when we talk about 20% return, I'll tell you that is untenable. It's crazy. Even when the bonds are returning to you 18%, we all know why that is happening. It's happening because the government is borrowing money crazily. Otherwise, those are not tenable returns and they are not sustainable. And yes, the government may not sync with your money. You can be sure it's likely to be very safe. But let's not talk about big returns that are not realistic. They are not. When you find a circle giving you 12%, those are very, very realistic returns. Anyone promising MMF, these money market funds are offering you that 18% or 14 that we're talking about, it's purely because they were able to invest in that government bond that is guaranteeing them that money. Otherwise, there is no investment you're going to make that is going to give you such outrageous monies. And we have failed as financial advisors not to tell the truth. And that is why you're going to find Kenyans going to places where they have been told 23%. Believe you me, and that was monthly. So you have to ask, where are they getting these mindsets? That's just greed. And it is actually irrational greed. Because even when you have greed, you've got to base it on something. You've got to have some reality or practicality. So please don't be deceived anywhere. A 20% return per annum is actually very, very high. Okay, but when the government is offering you 18% for even those 5 years or 8 years, we can work with it. We can work with it. That one I'll not tell you not to invest, but we can work with it. But you are aware of the risks that could be involved, and you have seen even previously the government has not been able to offer you such a return. Why? Because they knew where are you going to get that kind of money. So as we think about returns and about investments, let's be practical. Your 12% should be satisfactory. We are not saying that you shouldn't be ambitious, but be practical about what is there. So as long as your return is able to give you something on top of your inflation, inflation, I'm sure you can be able to discover it's communicated all over. Let's be realistic. Get your return above inflation. Maybe your 10% is actually practical. Let's be real. So the circles actually on average offer very good returns. MMF currently are offering good returns because they're able to invest in that government bond. Okay, so just because I don't want to get out of here without something, I work with Dime Blair, and we do. You were asking about international investments, so show shares from the international spaces we can be able to give you, or other assets. But yes, KCB is doing a fantastic job. The banks do a fantastic job, and even the insurance companies. But we have that little edge as Dime Blair and some other players who are in the financial industry.
Thank you so much. So you can respond
Yeah.
to the questions and then we conclude.
Yeah, thank you, Lydia. Yeah, so like I said, returns, be very careful about chasing these significant returns you're seeing in the market. So it is not in our, and I believe she has told you, it's not in our prerogative to present to you very exorbitant returns and a very nice color. And at the end of the day, you lose your investment. We would rather give you real returns in the market. The IFB and the TAPS, once the government issues an IFB, it could issue, let me use an example of 50 billion shillings. It's looking for 50 billion shillings. Let's say participation brings it to about 45, or let's say they're able to receive bids of about 45 billion or 40 billion. That means they have underperformed on that particular issue. They have not raised the amount that they had set out to raise from the market. So when they have not raised that amount, they might, in some instances, they issue what we call a tap sell to fill up the remaining gap. So that is where a tap sell comes. So if you had missed in the previous auction, which was the primary auction, you have an opportunity to bid at the tap sell. So at the tap sell is where they will issue a new one, a tap sell of the same bond. Tap sell of the if it's an IFB 8.5, they will issue what we call a tap sell for the IFB 8.5, where you can be able to participate. Normally, the difference in rates, yields in the fixed income market fluctuate, and like I said, they are influenced by demand and supply. So you might find it at a different rate, the tap sell at a different rate, but normally they oscillate around the same rate at which the previous one. And normally it just about either maximum of a month since they issued the main issue, that they will issue a top sell. So it's normally very closely followed, and the rates would not be very far from each other. So if if you miss that opportunity in the primary auction, you have an opportunity in the top sell. Okay, I hope I've answered you. So that's the difference between a top sell and an IFB. Otherwise, thank you very much for the time. I've really enjoyed being with you guys. I've enjoyed meeting you and seeing you. I will leave my card behind there. Anyone who wants to reach out, you can pass by the table and pick the card. If you have any more questions, I can see you have Lydia as part of your team. You're always free to ask.
Yes, I think there's a gentleman behind there. I think ni
Oh.
kama hujajibu swali yake.
Oh, yes. Oh, the pensioners. Pensioners, liquidity. You ask about liquidity. You're contributing to a pension fund. Uh-huh. So yes, so we have got very, very good pension schemes. I don't know which one you're contributing to, but I would advise one of the things to take advantage of is a good pension fund, a solid pension fund that has stood the test of time. That you are sure that once your maturities are due, you can be able to actually get your money. So for us currently, we don't have a pension product. We don't do pensions, though our bank assurance arms deals with. It's a broker for the pensions. So we don't issue it as KCB as a pension product currently. Okay.
Thank you so much. I feel we've gained a lot. We've learned. Now I think we are hungry now, right? Yes. Now I think nataka tu tumpigie 5 factorials na tunapiga na in style Tusipige na haraka haraka, sawa sawa. So tusimame ndio tumpigie makofi vizuri. In 1, 2, and 3, we are about to start, okay? Are we set, all of us? Yes. In 1, 2, 3. We said 5, 5 factorial. So we are doing 5, 4, 3, 2, 1. Sini sawa? Yes. So tuanze. Thank you so much.
Thank you.
We
Thank
have
you.
a seat. I'll invite Quinta to give us a few remarks on our product, and then our chairperson will come over. Yes, Quinta, karibu.
All right. So, in the spirit of lunchtime, and of course, the fact that we've sat for quite a long time, I won't take so much of your time. But I think having had such an educative forum and having all of us here with us, I don't think it will be an injustice for us as all self-help not to at least remind our members about our products, and also take this chance to invite all of us who are here today and you've not signed up to be a member to at least be a member. So we have these leaflets on our table, our registration desk. If you don't have one, please pick one as you go home. But one thing we want to remind you is the products that we have and the products that we are offering and why you should be a member of St. Paul Self-Help Group. I won't go into so much details, but the 3 things I really want to mention is please open a member account. I opened a member account through the help of someone who just met me walking around here and told me, do you have an account in Self-Help? And I said, no. And I just walked up there, opened an account, like I think 8 years ago when I didn't even know I would need it right now. And it has been of so much help because of the fact that you can get loans. And right now we are even disbursing loans up to 250,000 within 3 hours. So you can imagine if you can save and save and save, and you have a business that you need to do something immediately, you can just do a request of like 50,000, get the money within that day, and it's your stuff. So in the spirit of just ensuring that we are maintaining our liquidity and availability to get money, open an account with Self-Help Group. We also have the Little Angel account. This is majorly for our young ones. So for parents who are here
and you have your children, you can open an account as early as now. And there is no limitation to the amount you can save. And this is for their future. Then we also have the groups and the Chama account. So for those of us in Chamas, in groups, to help our treasurers is the burden of having them collecting the monies, having reconciliations. And the way things happen nowadays, you find the treasurer is having like 20,000 for the group. Wanapata shida, they use that money. Why not open an account with self-help, and your money will be safe. And then also, you're able to access that money when you can. So please read this, share it with your friends and your families, encourage them to open accounts. It might not help you today, but in the future, for sure, it will help you. So thank you so much, and looking forward to see some of you just open an account today with us there. Sawa sawa. Thank you so much.
Thank you, Quinta, for that. The second last part, we need to get your comments about the today's talk, and probably what you feel we can talk about in future, the kind of speakers you would want us to look for. So I will invite you to take out your smartphones on your hearts, and type ment.com, search for ment.com. ment.com. Once you get there, you should be asked for a code. Then you provide the one that's here. Maybe you can, Kevin, you can add the font for the code. Increase the font. Anyone who cannot see from the behind, the code is 1704668. 1704668. So there'll be just 3 questions there. 3 questions there. You can answer them. And then should go to the last part. So when you get to the last page, there'll be can see from there. So when you get to the last question, which asks for what topic should we explain in the next investment talk? Is pro in the next investment talk? After your answer, submit and say next question, and then the survey will add there. Anyone with challenge? So from here, you'll be able to gather data and be able to plan for the next investment talk in a way structured as per our requirements. So as we finish that, wewe ndio unapeana zawadi. Ya peana zawadi. Peana brown. So as we finish that, we had a present for our guest speaker. Diana, maybe you can come with it. So our guest speaker can come forward. I'll ask a former chairman will also join us here, Mr. Brown. Give the gift for our speaker.
Very much. Wow. Thank you. Thank you. Thank you so much. Asante. Asante. Asante.
Thank you so much. So I think the gift is normally opened by the owner, and the owner will open it huko mbele. So as we finish, I think I'll ask Margaret to give vote of thanks, and then Quinto will pray for us, and then we go for refreshment.
Good afternoon, members. I think we all agree that we are more empowered now than we came in. We have been given a lot of information that we can use in our decision making. Am I correct? Good. So our first vote of thanks will go to our speaker. I think he has really committed himself in sharing the information. And I believe that we have all benefited and we are going to make use of that information in our investment decisions. So thank you very much. And we look forward to inviting you again for more information. Thank you. Our next vote of thanks will go to our members, both the online and you people who have attended physically. If you are not here, we would not have held this talk because we needed an audience, and you provided the audience that we needed. We thank you for coming up in large numbers, and we believe that this is the beginning. And going forward, we are going to be having more of this so that we can get empowered and invest wisely. So members, those who are here, those who are online, thank you very much for your coming. Our next vote of thanks will go to our members of staff. They are the ones who have been running up and down to make this event a success. Was it successful? Yeah, so we thank our members very much, our staff members, and we believe that they are capable of handling any event. And in future, we are going to have even more of this. So our staff, thank you very much and keep up the good work. Our next vote of thanks will go to our service providers. We have the arrangement of the hall, we have the microphone, we have those people who are watching online, we have our caterer at the bank. We thank you all for whatever you have provided, for whatever part that you have played in this exercise. So thank you all for your service. And our final vote of thanks will go to my team, the team of management. We have been coordinating this exercise up to this last minute, and we have seen the fruits of our coordination. So my team of management, thank you very much. And we look forward to having many more of this. And with that, can we all stand and clap for ourselves, all of us? As our MC has been having, I think we'll just have a 5 factorial for all of us who have contributed to the successful of this event. So we have 5 factorial. Thank you very much. MC, where are you?
Good afternoon, everyone. Now for the final session, let's pray for the food that's ahead of us so that it can be blessed and sanctified. Let's stand up and pray. In the name of the Father, the Son, and the Holy Spirit, amen. Heavenly Father, we come before you. We thank you for this day that we've had, O Lord. We thank you for the success that we've had, O Lord. We thank you for our speaker. We thank you for our members. And we thank you for the knowledge that we've gained today. And we pray that we may be able to use it from today to the future. We have food before us. We pray that you may sanctify it. It may be of good use to our bodies, O Lord. And we pray for all those who do not have, that you may bless them. Later, as we go back to our homes and different destinations, we pray for journey mercies. We pray all this, believing and trusting in your name. Amen. In the name of the Father, the Son, and the Holy Spirit. Amen. Karibuni lunch or tea and snacks.
Hi, I hope I was injecting. No, that's as I am. What he says I am. What he says I'm back. Don't pull my hand. Don't confess.
So as you take your tea, kindly try to mingle, try to get to know the person you are sitting next to. Ujue kama atakupatia loan ama hatakupea. Na hao watu wenye umesikia watu wa pension, ensure mmeengage. Uanze kukula pesa yako mapema kabla ufike 70. Kula ukiwa 60 ama 40.
We are a chosen generation. We've been called for a show this. So let's pick.
So as you take your tea, kindly get back to your seat. Enjoy as you mingle together, okay? Usiharakishe kuenda, usikunywe chai. Chai najua ni moto, so ukikunywa na haraka itakuchoma. Pole pole tu bila pressure. Yes.
And see me. What he says I am. Where he says I'm at. I know who I am. I know who I says I am. Where he says I am. Where he says I'm at. I know who I am. I'm
CPT na offer.
Online community, poleni sana. Chai mutaikunywa online, so you can live at your own pleasure because we are about to switch off the online community.
Jackpot. Betika. CPT na offer. But with M-Co-op Cash, your with M-Co-op Cash. Raundi hii ni kundudhika na Betika.
Mama Maria, Johnny Nyote,
tumshangilie mama, nyota hiyo ni Mama Maria. Joni nyote tumshangilie mama. Yeye ndiye mlango wa mbingu, yeye ndiye chombo cha heshima.